Morning, everyone. Good morning. Good to see you all here. Can I get you to just clap your hands? It's amazing. I am so excited. My name is Elder Tanea Johnson. I'm from this church, New Generation Church, and we decided to host this with the help of the Naca organization for people to buy homes. And I'm so inspired to see so many people here this morning. I don't know about you, but you look around the room, isn't it inspiring to see so many people who want ownership? And so welcome to our church. Welcome to this place. I'm excited about the workshop. I know Greg is. And so I'm going to turn it over to him, and you are in his hands. Everybody clap for Greg.
Thank you, Tanea. Good morning, beautiful people. It's a pleasure to be here. I am Greg Hargrave. I am one of the office directors for the Naca Newark office. I am proud to have by my side my right-hand person, senior mortgage counselor, Laura Spiesman. Let's give Laura a round of applause. I am also joined by senior NSR, Ms. Kim Worrell, there in the back, who's managing the registration, and Ms. Veronique Wisdom, who is also an NSR in the Newark office. So welcome to this Naca Homebuyers Workshop presented by the Naca Newark office. As I mentioned, I'm the office director for Newark. Newark is a very vast territory. We cover most of New York, the 5 boroughs, anything outside of upstate Rochester, Buffalo. We cover all of New Jersey, parts of Pennsylvania, and parts of Delaware. So you're in for an informative session. Everyone should have a copy of the NACA qualification workbook. If you don't, raise your hands. Yeah. So that qualification workbook is going to be your one-stop guide for everything that you need to know in order to qualify for the NACA Best in America mortgage. I suggest that you read the workbook. All the information that you're going to need, the information that's verified and valid, you'll find in that workbook. You'll receive a lot of conflicting information through social media, online, word of mouth. If it's not in writing, then it's not verified, unless you hear directly from someone who works for the NACA organization. So you might want to read it from cover to cover. If you're not a reader, start with the table of contents, pick a topic that's of interest, and start there. There's also a notes section in the back of the workbook. You're going to want to take notes during the workshop. It is an interactive workshop, so participation will be required. As a membership organization, there is a participation requirement to being a NACA member. Those members that you see here with the yellow shirts on, they're receiving participation credit for volunteering to help to facilitate the NACA workshop. So certainly grateful to our volunteers. Let's give them a round of applause. All right, so I have some bad news and some good news. Bad news is that it's a 4-hour workshop. The good news is that you get to listen to me talk for 4 hours. No, it's a 4-hour workshop. You must stay to the end in order to get credit for the workshop at the end. I'll turn it over to Laura Spiesman. She's going to walk everyone through obtaining your NAC ID, but you must be present. Typically, we wrap up in about 3 hours, 3.5 hours, so we'll try to close out by 12:30 at the latest. No promises. I'll open it up for questions at the end, and we'll hang around as late as 1 o'clock, 1:15 to answer all questions that are somewhat personal in nature. There will be a Q&A section throughout the workshop. Be sure not to reveal any of your personal information. If you have a personal question that's specific to you, I'll be available, Laura will be available towards the end to answer your questions, okay? Everyone comfortable and all set? Laura, was there anything else? No? Stay to the end. Oh, yes, can't forget. So you need to understand what your next steps are at the conclusion of this workshop. If you don't know your next steps and you call the office and say, hey, I went to the workshop in Hempstead and I don't know what to do next, Laura's fired. So once we complete the workshop, the very next steps for you would be to complete the information in the member portal and schedule your intake session, right? So you might want to make a note of that. That's the next steps. You're here today to learn a little bit about the organization, to join NACA in our fight for economic justice, and at some point obtain access to the best mortgage in America. But it starts with this workshop, and then the next step is going to be to complete the information in your member portal and schedule your intake session. All right. Save all your questions till I open it up for Q&A. If you have a question, just make a note of it in your workbook. The number here is the number to our National Service Representative Center. It's 425-602-6222. You can call that number at any point if you have any questions or you need to get in contact with anyone in our organization. That's going to be your point of contact. So we're going to start with a brief overview of the history of NACA as an organization. I'm going to share a video with you to show NACA's timeline over the last 30-some-odd years as we led the fight for economic justice in the United States. Then we'll talk about the NACA mortgage, NACA's Best in America mortgage. I'll introduce a representative from the NACA Real Estate Department. They'll introduce you to how to shop for a home and work with a realtor. We'll go through a budgeting exercise. We'll talk about what's an affordable mortgage payment. And then we'll talk about the different NACA membership types. We'll talk about the requirements to qualify for the NACA mortgage. We'll talk about member participation requirements. And then I'll show you a few screenshots of the NACA state-of-the-art member portal. At that point, we'll all jointly say the NACA pledge. And at that point, we'll welcome you to the NACA family. All right, so we're going to share a quick video about the history of NACA. Just a second.
NACA is a non-profit organization whose mission is to end financial exploitation and to stabilize your neighborhoods. We provide the best mortgage product in America. While NACA provides comprehensive housing services, it is first and foremost a confrontational community advocacy organization.
NACA was founded by Bruce Marks more than 30 years ago. He continues to be the CEO and visionary.
It is a war waged on many fronts. We take the junkyard dog approach. Once we grab on, we never let go, no matter how long it takes.
NACA is the outgrowth of the Hotel Workers Union Local 26.
The overwhelming majority of our membership are paying somewhere between 60 and 70% of their income towards housing.
Local 26 undertook a 5-year campaign to provide housing assistance for its members. As part of this fight, hundreds of workers went to Washington to change the federal labor law.
Strong enough to challenge the law, strong enough to change a stupid law that says we have no right to negotiate. what's good for our family.
In 1990, President Bush changed the federal labor law that hadn't been changed in more than 20 years. And for the first time, a local union was responsible. Now, unions could negotiate to provide down payment and closing cost assistance to workers to make homeownership a reality for working people.
They've always taken a look at this. The NACA goal is to set a standard for the country. But if you're going to be out there fighting the financial predators, you got to take on the big ones. You can't take the easy road. And that sends a message to the institutions out there that says, when NACA takes you on, we're going to do whatever it takes to win.
When you own a piece of the rock, when you own your neighborhood, you rise up and drive the parasites out because you have that power. We have that power.
NACA was the first to spearhead campaigns against predatory lenders. It coined the term predatory lending. Lenders set up borrowers to fail through high interest rates, outrageous fees, and unreasonable terms. Whether it's called loan sharking, subprime lending, or payday lending, the fundamental issue remains the same: the taking from working people and minorities to benefit the wealthy. This is a continuation and expansion of the wealth disparity gap.
How many of you are ready to take the blood-sucking profiteers on? How many of you are down for the fight?
The first target was the largest and most aggressive predatory lender, Fleet Bank. They cut off credit to minority communities while providing lines of credit to loan sharks.
We're staying here to meet with you. You're not staying here. Well, then you're going to have to go back.
In Georgia, where Fleet Finance is based, more than 20,000 borrowers think those sales look more like fins, the fins of loan sharks.
There really were substantial abuses within the industry which wound up causing people to lose their homes for no legitimate reason.
It is a wake-up call to Congress.
This nationwide battle took 4.5 years. It included demonstrations and confrontations wherever Fleet was active. We won the war.
It is welcome news for us that it's decided to embark on this program to commit $8 billion for community lending.
As part of the victory, Fleet not only pledges $8 billion to add to its community lending, but contributes millions to settle lawsuits and funds $140 million to establish NACA's Best in America mortgage program. NACA also convinced Congress to pass new legislation.
I have prepared legislation that will provide an important first step towards filling in the gaps in consumer protection. It's called the Home Ownership and Equity Protection Act of 1993.
The next target was Barnett Bank and its predatory subsidiary, Equicredit.
The group says it's a grassroots organization that uses persistence to force banks to change their lending practices. In Jacksonville, the bank they targeted is Barnett.
We believe in confrontation. We believe in being at the bank wherever they go. We go to the analyst meetings. We go to the annual meeting. We go to where they make presentations. And we have a long attention span.
Barnett succumbs to the pressure. NACA exposes and changes Barnett's predatory subsidiary, Equicredit, and Barnett funds $20 million to the NACA mortgage. First Union was next. In 1995, it was one of the nation's largest lenders and one of the most racist.
He calls himself a bank terrorist, but he uses words, not bombs.
A protest is planned tomorrow against one of Charlotte's biggest banks, First Union.
First Union has some of the worst minority lending practices.
You check us out, you check us out.
Fast Eddie is First Union Chief Executive Ed Crutchfield, and he's getting a lot of attention. These people say First Union stands out, and this battle is getting personal. First Union CEO Ed Crutchfield is on protesters' wanted flyers. They don't respect working people because they want to lend to their own.
NACA forces First Union to lend to minority borrowers, and it funds $150 million to the NACA mortgage. CEO Ed Crutchfield, the target of the campaign, is personally impacted.
A one-time investigation
manufactures some of the most popular cars in America.
Ford, quality is job one.
But there's another side of the Ford Motor Company you may not know about.
Ford is absolutely a loan shark.
Ford is one of the largest money lenders in the country, and workers inside the company say it used aggressive tactics to put people into debt.
Let me tell you what a sucker. Cha-ching. We just made the company some money.
They eat you up and they spit you out. That's Ford Motor Company.
A lot of people are getting fed up with Ford. In Atlanta, thousands packed a church to bear witness against the way they say Ford does business.
They have ripped off our community. They have stolen the wealth out of our neighborhood.
This man is also going after Ford. Bruce Morris, a community activist who has pressured corporations to make available more than $1 billion in low-cost mortgages.
Remember that name, Ford Motor Company? They're vicious. I had a loan with them, two in fact, and it's 24% interest. That's what 24.
NACA is also victorious against Ford. It reduces interest rates for hundreds of thousands of borrowers, funds $100 million to the Naca mortgage, and divests the associates, then the country's largest finance company. While we won those battles, we recognize that the power of greedy lenders, investors, rating agencies, and others, supported by the government, created predict the crisis, which would have a devastating impact on homeowners and communities. Standard in lending.
They're demanding Countrywide save face and their homes by rewriting mortgages.
NACA got what it demanded. Countrywide signs a legally binding agreement with NACA to reduce interest rates and outstanding principal amounts, making their predatory mortgages affordable. Countrywide participates in NACA's Save the Dream events to modify mortgages. NACA's next target, Bear Stearns.
Chant Main Street, not Wall Street. Angry homeowners today storming the Bear Stearns building in Manhattan.
Let's make sure that they hear it. Let's spread out, and we're staying. The government is going to do anything. It's an unprecedented giveaway of taxpayers' money. Why should our hard-earned money be used to benefit and subsidy the people that created the mortgage crisis?
Bear Stearns signs a legally binding agreement with NACA to reduce interest rates and outstanding principal amounts, making their predatory mortgages affordable. Bear Stearns participates in NACA's Save the Dream events to modify mortgages. The backbone of NACA's aggressive nonviolent advocacy is to hold the decision makers personally responsible for their actions. Allison, CEO of Fannie Mae, which sets the industry standard for lending, was confronted by NACA as we blocked their main entrance.
Look us in the eye. Don't look at your bottom line. Look us in the eye and see what you've done. And we're going to make you responsible for what you've done. And you're going to bring some solutions to the table.
Fannie Mae signs a legally binding agreement with NACA to reduce interest rates and outstanding principal amounts, making their predatory mortgages affordable. Fannie Mae participates in NACA's Save the Dream events to modify mortgages.
They are on the verge of losing their own homes, so they decided to move in here. This is the Greenwich, Connecticut home of William Fry, a hedge fund manager who is trying to
historically, but certainly not recently in our country.
Well, what it says that we were disciplined, organized, and we pierced that veil. We pierced that comfort level that they have. The $400 million buys them privacy. No longer.
Saxon Mortgage signs a legally binding agreement with NACA to reduce interest rates and outstanding principal amounts, making their predatory mortgages affordable. Saxon participates in NACA's Save the Dream events to modify mortgages.
We got the money, but they're not giving it to the people.
Martin Luther King would have stood up for something. Jesus stood up for something. We gotta stand up for something.
Chase Bank signs a legally binding agreement with NACA to reduce interest rates and outstanding principal amounts, making their predatory mortgages affordable. Chase participates in NACA's Save the Dream events to modify mortgages. With legally binding agreements with all the major lenders and investors, NACA did what no one else thought possible. We organized massive events at convention centers nationwide, providing same-day solutions for homeowners with unaffordable mortgages.
So what I do is I take your mortgage payment and I reduce it by the total deficit that you have.
These events, taking place over at least 5 days each, attracted tens of thousands of homeowners at risk of foreclosure. At each event, NACA counselors teamed up with lenders who had hundreds of staff on site to provide affordable solutions.
It's a good thing for the banks. We do the work for them. It's a win-win situation.
Saving homes and saving lives.
It's a last-ditch effort for hundreds of homeowners on the verge of foreclosure. Thousands of people wait in line downtown in hopes they can save their homes.
Thousands of people fighting to keep their homes from foreclosure. It's become a nearly insurmountable challenge.
You can see there are thousands of people. They're expecting tens of thousands of people here to get them. Dozens of people are spending the night outside in the cold and rain, hoping to hold on to their homes. Yesterday, and camped out in order to guarantee their spot. Losing their homes. Thousands pleading with bankers today, hoping to catch a break.
People from different walks of life, all in the same predicament.
The country are converging on South Florida. They're looking for help to stay in their homes.
Clear picture of the level of strain and suffering the foreclosure crisis is creating for families. Look no further than Daly City.
We're inside the convention center where the...
This could be the last chance of saving the place.
This facility is packed with people looking to refinance their mortgage and save.
Wow, Diana, look at that crowd behind you. It's unbelievable, Michelle. Just take a look around. Look at it. Friday night, what are you doing? Look at what these people are doing, and they will probably meet here. First stop for what is really a mobile servicing center. Plans are being made to take it on the road across the country.
This is the devastation that these banks have caused. No one should have to be sleeping here overnight, staying 24, 48 hours just to save their homes. And everybody who's tried to work with the banks has failed. And this is the consequence. This is like a war zone. And it's a war zone in America.
Despite the opposition from government and others, the results were extraordinary. Over the 144 Save the Dream events, more than 250,000 homeowners at risk of foreclosure obtained affordable same-day solutions, and many more obtained modifications through NACA's Home Save program. Homeowners were able to reduce their interest rate to as low as 2% and sometimes lower their outstanding principal, saving hundreds and often more than $1,000 in their monthly mortgage payments.
Our mortgage was $4,200 and it's now $2,100. Saving me $1,000 a month.
My monthly payment has been reduced $3,000. It's amazing. Thank you.
They brought our interest rate down from 10% to 2%. We're saving $1,100 a month on our loan.
If it wasn't for NACA, I wouldn't be this happy today.
My mortgage payment used to be $2,235, and now they lowered it to $1,305. And you guys just hold on. There is help and there is hope at the end of the rainbow.
CRA protester spends 4 years harassing a bank and bank's president. Finally, the bank craters and gives them $1.4 million, gives them $200,000 to set up their organization. They now got 20 offices, lending $3.5 billion.
A decade later, Naca has more than 50 offices nationwide, and major lenders have committed more than $13 billion. We provide the best mortgage in America. No down payment, no closing costs, no perfect credit, and always at a below market fixed rate.
My interest rate is 2.75. I bought it down by 1%, and my monthly payment is $11.32. My interest rate is 1.75%. I pay $6.28 a month. About now, my interest rate is 2.875, and my payment is $675 a month.
The interest rate is 1.75, and my payment is $902.
Interest 12%, and I'm paying $710 a month.
I have an interest rate 0.87 and I pay $580.
My interest rate was 3.5. I pay $686 a month.
Naca is absolutely the real deal.
I have a mortgage payment of $615. Being this young and going in on a house purchase by myself, I didn't think that was possible. But Naca is truly amazing.
I've been in America for 10 years now, and this is probably the first American dream I've experienced.
I really did get my dream home. It's everything. Thank you.
Bank of America has been our largest partner over more than 20 years. In 1995, it committed $500 million to the Naca mortgage. 4 years later, $3 billion. Another $3 billion 4 years after that, and in 2011, it raised their commitment to $3.5 billion. In total, $10 billion to help minority and low-income borrowers afford homes.
By identifying qualified applicants, giving them the financial management skills they need, creating a financial safety net for those who need a little help in crisis, and the Neighborhood Assistance Corporation America was just the partner I was looking for.
Loan amount $252. My mortgage payment is $1250, and just in a year's time, the value of the house has gone up to $340 already. My loan is $200,000. My interest rate is 2%, and my mortgage payments is $0. I own a duplex, and my other renter is covering my costs.
Naca has built the strongest foundation in the mortgage industry for lending to low and moderate income borrowers. We've added a 15-year mortgage that allows you to build wealth quickly.
0.05 interest rate for 15 years. It's a blessing. It's fantastic.
Another program allows Section 8 participants to use their Section 8 rental payments as mortgage payments. Called HOT PHA, it provides unprecedented homeownership opportunities. NACA continues to develop its state-of-the-art operations with a streamlined mortgage process. There's much more to come as we expand these programs and develop additional financial services products for working people.
I think people take more pride in the community because it's their property. This is hope. This is light at the end of the tunnel.
NACA believes in the principle that we are thy brother's keeper. Over the past 30 years, we've won the battles, and together we will continue to win the fight for economic justice. With more than 2 million members, we are a unique and powerful force as we act to make fundamental changes for working people.
And you're not just a house on bricks, you're actually a human being. I can go home and say, I have a home, thanks to NACA.
We require people to volunteer.
You need to see a counselor? Just a minute, let me see if I can get someone for you.
Whatever way they feel comfortable.
Being part of the demonstrations, helping out at a Save the Dream event, helping in our offices, helping getting the word out.
There is no fight that is too big or too small, that together we cannot win.
Neighborhood Assistance Corporation of America is one of the greatest online programs there is.
Because it can really change the course of your life, the course of the life that you create for your family. Greatest program in America, honestly.
The door of NACA are open for you. Go next week, make an appointment, I'll get you home.
Welcome to the NACA family.
Okay. How was that? Quite emotional, wasn't it? It's interesting to reflect on that time period during the financial crisis of 2008, 2009, and we're in 24. So what is that? 16 years ago? 15, 16 years ago? What's most unfortunate about what took place in 2008 and 2009 is it's arguably the largest redistribution of wealth from the middle class to investors, right? So a lot of middle class families, their wealth was tied to their homes. And for millions of people, they lost their homes during that time. And so I've had the honor to work with NACA for the last 4.5 years as a counselor, more recently as a director, and it's been an honor to work with our NACA members and help, hundreds and hundreds of NACA members achieve the dream of homeownership. So, while you're here experiencing that emotion, what I encourage you to do is reflect upon this moment as you start to move forward in your journey through homeownership, because the NACA program, as many of you may be aware of, is not the easiest path to affordable home ownership, but I will argue that it's the best path, right? And so what's best for you is not always easy. So reflect upon this moment, use that emotion to channel you forward. As an organization, NACA has over 48 offices across the country. What that means is that you have access to NACA's comprehensive counseling services no matter where you are in the United States. And you also have access to NACA's Best in America mortgage. The organization's history timeline spans over 35 years. We were the first to coin the term predatory lenders. When you hear that term predatory lender, what do you think of? Was that Fannie Mae? 2008, 2009. Yeah, so for the most part, when you think of when I hear the term predatory lenders, I think of a sketchy financial advisor or mortgage advisor in a small, smoky office calling elderly people and trying to sell them reverse mortgages. All right, that's what I think of when I think of a predatory lender. Predatory lending doesn't encompass everyone who works in finance or works in mortgages or the finance industry, but for the most part, it represents, that small fraction of people who use their skills, their talents, and their know-how to take advantage of people who are less knowledgeable, right? So for the most of us, we haven't been privy to a private school education or education system that taught us money management and finances. And so as we started to build our families and build our communities and our lives, there have been those who preyed upon that lack of knowledge to their own benefit and own advantages. So that's part of the reason why this organization, NACA, exists today, to fight against the predatory lenders. In fact, we're taking on a new fraction of predators in our communities. Anyone familiar with Invitation Homes? Invitation Homes is one of the largest single-family rental corporations in the country. So there's an epidemic of investors, large corporate investors going into single-family residential communities and buying up all the inventory and making the people that live in those communities permanent renters. When they buy those properties, they don't come back to the market. Very, very prevalent in the Atlanta metro area. I read an article that between Invitation Homes and other large corporate landlords and corporate investors, they own maybe 1 in 5 properties in the Atlanta metro area. What that does is it robs us of the opportunity for home ownership, to build equity, right? To really have a say-so in our community. So that's the next fight that the CEO is taking on against those predatory landlords. So as an organization, NACA is the largest HUD certified organization in the country. We account for approximately 33% of all counseling in the United States. Our organization's mission is neighborhood stabilization through affordable home ownership. And we're going to talk about how we achieve that mission through our comprehensive counseling process as you learn more about our organization and you prepare for home ownership. All of NACA comprehensive services are free. So as a NACA member, this is your first step in your journey to affordable home ownership. Once you become a NACA member, you receive your NACA ID. You're going to have access to a dedicated counselor such as Laura Spiesman, who has how many years experience? She has over 9 years experience in affordable home ownership counseling. You're going to get access to a Laura or a Greg Hargrave, who has over 4.5 years in affordable home ownership counseling, loan origination, and a plethora of experience in finances. We're going to offer you comprehensive financial management counseling, budget counseling, home ownership counseling, debt counseling, and credit counseling. The value of these services are probably in excess of $25,000, $50,000 over your journey, from the moment you start to work with a NACA counselor to the point you become a NACA homeowner. And all of those services are going to be provided to you for free. By show of hands, how many people believe that? Okay, we have some optimists in the building. How many people don't believe it? How many people don't know today is Saturday? So a lot of people on the fence. You feel like it's a trick question? Yeah. So it's always perplexing, right? If someone tells you that they're going to give you all those services for free, it's probably not true. So there will be a cost, right? It's going to cost you a change in perspective, a change in behavior, right? You're going to have to change your perspective of money, financial management, savings. And then you're also going to have to change your behavior, which means you're going to have to change how you actually manage your money and how you actually manage your savings. And for most people, those are the most challenging aspects of their journey to affordable home ownership through this NACA program, right? Monetarily wise, $36 is the NACA annual membership fee. That's per NACA ID. So if you have one NACA ID in your household, which is more often than not the case, you'll pay a membership fee of $36 annually. And you'll get access to a Laura or Deandra McCardo or Greg Hargrave or Hervey Emmanuel. These are the counselors out of the Newark office, or any of the other 100+ counselors across our organization. And they're going to provide you with all these counseling services. But in terms of your success, it's going to be dependent upon how well you implement, how well you manage your finances, how well you heed the advice, and how well you implement the advice. Organizational structure. We have the counseling and operations division. That's where all of the counseling is done, where we're responsible for providing those counseling outcomes, such as financial management, budget management, home ownership counseling, et cetera, et cetera. We have our mortgage department. Mortgage department is responsible for negotiating and dictating the terms of the NACA Best in America mortgage. They negotiate with Bank of America to make sure that we can offer this mortgage, which is no down payment, no closing costs, etc. We also have our NACA Red team, real estate department. So it's a department of NACA in-house agents who are responsible for representing NACA members and solely representing NACA members throughout their home ownership journey. So once you get qualified and approved to start shopping, you have the option to work with a NACA Red member. We have our hand department. Has anyone heard about hand? No? Hand is pretty notorious. So hand is the department that's responsible for making sure that once you take possession of your home, there are no hidden surprises, no deferred maintenance, right? They're gonna make sure that when you take possession, that home is in move-in ready condition. Otherwise, they're gonna make sure that there's a plan and financing allotted to make sure that the home is in move-in ready condition, right? And there's a number of different ways they do that. They require that you have a home inspection done by a licensed home inspector. They're gonna evaluate the home inspection report. They're gonna go through all of the details from the inspector and determine what items need to be addressed, what items need to be repaired, and they're gonna work with you to create a budget. And the good thing is, using a NACA mortgage, you can finance the cost of those repairs into your original purchase mortgage, right? So you can buy a home for $100,000, the home might be worth $400,000 after the repairs are done. You have a mortgage payment that's high enough to finance a home for $400,000. The lender will give you $300,000 to do all the repairs and update the house. As long as it's gonna be worth $400,000 and you can get the property done in 6 months, that's another feature and benefit of the NACA mortgage. The hand department is the team that's responsible for that. We have our member services department. The member services department is our one-stop shop. It's like the customer service hub of NACA. It's the number that I gave you earlier when we first started the presentation. One-stop shop for everything that you need to know. If you need to get in touch with your counselor, if you want to get in touch with the CEO, anyone in management, you can contact member services and they'll put you in contact with that person. We have our home safe department, which is the department that was kind of featured on that history of NACA video. They're responsible for helping homeowners that are in danger of losing their homes. They help them to restructure their mortgages, potentially get some sort of deferment on their mortgage payment so that they can retain their homes. And then we also have the advocacy department. Advocacy is not a single department, it's organizational wide, and it includes our 2 million plus members. It's the reason that many NACA homeowners can go through this program and benefit and have the NACA own a home through the NACA mortgage. It's because of the aggressive advocacy of our organization. NACA's hiring. NACA's been hiring since I started with the company. We hired throughout the pandemic. It's rare that there's any downsizing in the organization. If you're interested in any of the national positions, feel free to visit NACA.com and go to the employment page. All right, so now the good stuff, right? This is why you are all here, to learn about NACA's best mortgage in America, which is no down payment. What does that mean to you, no down payment? What is that? We're gonna give you a house? What does no down payment mean to you? More money for the mortgage, more savings in your bank, right? It's 100% financing. So to me, what that means is if you find a home, the home is $500,000, you qualify for a monthly mortgage payment that'll finance $500,000, and the home is worth $500,000, the lender will finance the full purchase price of $500,000, right? That's fantastic. So typically you have to put how much down? What percent? Right? So 20% is what most people have in mind, particularly when you think about a conventional loan, right? Conventional loan, most people expect that you're gonna have to put 20% down. It's not a reality. A few people actually put 20% down on their homes. The 20% mark allows you to not pay what's known as mortgage insurance, right? As long as you have at least 80% equity in the home, then you don't have to pay mortgage insurance. So, for most of us, the mortgage products that we're most familiar with or that are shopped most in our communities is the what? Say it again. I love the way you say that.
FHA.
She said, like, I hate them. FHA, right? Everyone familiar with the FHA mortgage? Right? It's shopped heavily in our communities because the down payment it's 3.5 now. Since the financial crisis, they increased it 0.5%. But the minimum is 3.5% down. So if you buy a $500,000 home and you have to put 3.5% down, how much is that? How much is 3.5% of 500,000? Hey, y'all take those phones out for everything else. How much is it? Who said that? Me who? What is it? Yep, 17,500. So Naca just saved you 17,500. I'll take it. No closing costs. What does that mean to you? You said malarkey? Deacon said you don't have to see a lawyer. Not quite. You don't have to pay for the lawyer. Yep. So whenever you buy a home, there's always going to be closing costs, right? You definitely want to be represented by an attorney. You definitely want to make sure that there's a title search to make sure the seller is the actual owner of the property and that they own it free and clear. There are no encumbrances, right? Those things require professional services, and professionals need to get paid. So there are always going to be closing costs. The benefit of this program is that the lender, Bank of America, will pay your closing costs for you. That's worth a round of applause. The lender, Bank of America, will pay your closing costs for you. So on average, closing costs could be somewhere between 2 to 4% of the purchase price of the home. If we take 3% of 500,000, how much is that? Oh, everybody got that one. That's easy math. 15,000, right? So NACA just saved you another 15,000. Plus the 17.5, how much did NACA save you so far? 32,500. Just from listening to me for 4 hours? That's a nice return on your investment. There's also no points or fees, right? So typically, when you get a mortgage, there's always some sort of origination fee or additional costs associated with the lender originating the loan. NACA has no origination fees. You're going to get below market fixed interest rate. So for the majority of NACA members, our priority members, their interest rate is going to be probably at least 1.125% lower than the market rate. So when I last checked, we were at 5.875. 5.875 for our priority rate. Anybody look at mortgage rates lately? How much is it? 7%, right? Yep. So that is exactly 1.125. So you're going to get access to below market fixed interest rate. And everyone, right, depending on your membership type, everyone gets access to the same fixed interest rates, not dependent upon your credit score or your payment history. No mortgage insurance. What does that mean? Anyone know what mortgage insurance is? Yes. You've given me the best explanation of mortgage insurance in my 4 years of doing this. Let's give her a round of applause. So that's exactly what it is, right? So if you put down less than 20%, the lender is going to require that you take out an insurance policy. That insurance policy, the monthly premium for that policy, which will be hundreds of dollars, will be included in your monthly mortgage payment. That insurance policy protects the lender in the event that you default. So if you default, let's say you still have $300,000 left on your mortgage, the lender will file a claim with the insurance company, and the insurance company will pay the lender the $300,000. you still have a $300,000 debt that you're responsible for. So it's a policy that protects the lender that you're required to pay, but it doesn't serve you. For NACA, there's no mortgage insurance. We also have one of the more aggressive interest rate buydowns. So for every 1.5% that you pay up front, we'll reduce the rate by 0.25%. We also don't look at your credit score. How many people believe that? Good. Nobody does. But it's true. So NACA doesn't look at your credit score. In fact, I've been counseling for over 4 years, and the credit reports have the credit scores. And I trained myself not to look at the credit scores, right? Because even though it has no bearing on whether or not you can move forward with NACA and get a mortgage, it's something about the number. Something about the number that forces people to have an opinion about who you are and your value, right? Anyone have their credit report pulled recently? Nice. Did you do it in person, over the phone, Zoom, virtual? What was it? You went to the bank? Okay. No, literally, did you have someone pull your credit? Oh, so you requested your free credit report? Yes. Yeah. Well, when you're shopping for a mortgage, depending on who you're working with, you may have a one-on-one conversation and have your credit report pulled. And it's a very, very awkward moment, even when you meet with your counselor, because every time you meet with your counselor, it will be face-to-face, even in person or virtual. And it's an awkward moment. I mean, the credit report generates in about, 15 seconds? It feels like 5 minutes while you're waiting for that report. Like your whole life is dependent upon this one report. And so it's interesting. You go into a lender and you're greeted. They sit down. They understand you're interested in buying a home, and they're very pleasant. They introduce themselves. Hi, I'm Greg. Thank you for stopping by. You're interested in buying a home? And your name? Goga? Mr. Goga, it's a pleasure to meet you. So in order for me to make a determination on how soon you might be able to qualify, issue you a pre-approval, I'll need to pull your credit report. Can I pull your credit report? Okay, great. Feel free, have some coffee. They're on my desk while I pull your credit report. Looks like you have a coffee there. Yeah, you do, right? Yeah. Pull his credit report. He has a 510. Goga, it was nice to meet you. I take my coffee. You have a good day. There's nothing I can do for you, sir. But that's what the experience is like. Your entire life comes down to 3 numbers. And for NACA, we're a character-based lender organization, right? So we're not going to look at your credit score. You're never going to be judged by your credit score. Because your credit score doesn't tell us about the circumstances associated with your financial hardships. It doesn't tell us that you went through a difficult divorce or you had to leave the workforce because you need to care for a sick or elderly child, a parent. It doesn't tell us that you suffered a medical hardship and it forced you to fall behind on your bills. A plethora of circumstances that are outside of most people's control. The number doesn't tell that. But Laura will give you an opportunity to talk through the challenges that led to any derogatory payment history issues, because that's where we're going to focus on your payment history for the most 24 months and primarily the most recent 12 months. And she'll give you an opportunity to write a letter, and then she's going to advocate with the NACA underwriting team and advocate with the bank to get you an approval and to help you close on your home, because she's going to make an assessment about your character based upon her interaction with you and being your counselor. Not only is she going to be a counselor, but she's going to be an advocate for you. So that's the difference between lenders that base your credit worthiness based upon a credit score and those that do character-based lending, such as NACA. Did I go the wrong way? These are some of the fees associated with the closing costs. What's the one consistent word that you see there? Fees, 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 fees. So, these people, these things are required in order to protect you, but there's a cost associated with it, and fortunately, Bank of America will cover it for you. So we talked about NACA's interest rate. You can always get the daily rate at naca.com. We have a 30-year loan, a 20-year loan, and a 15-year loan. They're all fixed interest rate mortgage products, over $20 billion to lend throughout our communities, and $15 billion of that is backed by Bank of America. So in terms of the NACA membership types, we have our priority members. A priority member is going to be any member whose qualifying income is at or below the median income for the metropolitan statistical area where you intend to buy your home. What does that mean? What's the median income for this area? Let's assume it's the same as the 5 boroughs. So this might be 124. Yep. Okay, so median income would be about 125,000. If your income is at or below, your qualifying income is at or below 125,000, and you're going to purchase in this metropolitan area, then you would be considered a priority member, which means that you're going to always get the lowest rate that NACA offers, which is 1% lower than the non-priority rate. Non-priority members are going to be the exact opposite. It's going to be any member whose qualifying income exceeds the median income. In this case, if your qualifying income exceeds 125,000, you would be considered a non-priority member. And with that, you'll have a rate based upon today's rate of 6.875 versus the 5.875. Qualifying income means it's the income that we're going to use for your mortgage payment, to determine your mortgage payment. So the income that's going to show on your loan application. So we do have the 15-year mortgage, which is known as the Wealth Builder mortgage. It's a great opportunity where the affordability permits. The challenge with the 15-year mortgage is that the monthly mortgage payment would be a lot higher versus the 30-year mortgage. So let's say hypothetically you're looking at a $500,000 home, and maybe the $500,000 mortgage might be about $3,600 a month for the 30-year loan. If you want to get a 15-year mortgage, that might increase to about $4,800 per month. So it's very difficult because the affordability is the issue that most of our members are faced with. It's difficult to use the 15-year mortgage. Benefit of the 15-year mortgage is that you own your home free and clear in 15 years. So my 4.5 years with NACA, I've done one 15-year mortgage. It was a parent selling their home to their daughter. So she got a great price. She also got a huge seller's concession, and it worked to do a 15-year mortgage. So she'll own that home free and clear after 15 years. I'm sorry? What would be the interest rate? An example I just gave you? Yes. The rate or the monthly payment? I don't remember what her monthly payment was. But it worked because the home was worth, let's say the home was worth $500,000. Her parents sold it to her for like $275,000. And it was a multi-family home. And they gave her a 10% seller's concession that we used to buy the interest rate down. So she ended up, one, with a lower starting rate because the 15-year mortgage has a lower starting rate. Also, you get more bang for your buck with the 15-year mortgage when you do buy down. So for the 30-year, every 1.5% you pay up front, which let's say on a $500,000 loan is $7,500. Every $7,500 that you pay up front to contribute to interest rate buy down, the lender will reduce the loan by 0.25%. on the 15-year mortgage, for every $2,500 that you pay up front, the lender will reduce the loan by 0.25%. So she got a lot more bang for her buck. Eligible property types: single family, so you can do a single family detached home, which is what most people shop for. You can do attached home, row homes, mobile homes, townhomes, manufactured homes. You can also do multifamily. Multifamily would be anything between 2 to 4 units. You can also purchase condos and co-ops. Requirements for condos and co-ops is that it has to be at least 50% owner occupied, and the HOA has to be financially sound. You can also purchase a mixed-use property. Everyone familiar with mixed-use properties? Yep. So it's like the bodegas that we see in our neighborhood. You typically see the corner store, the bodega on the ground level, and apartments above. Those are eligible. Requirements is can't exceed a total of 4 units. The commercial space cannot exceed 50% of the total square footage of the home, and the commercial unit also has to be on the ground level. All right, so we talked about NACA mortgage. Some of the benefits is what? No closing costs, no down payment, no mortgage insurance, no credit report, no credit score, and below market fixed interest rates. Give yourselves a round of applause. Nicely done. So those are the features or the benefits of the NACA mortgage. We talk about a conventional loan. Conventional loan is probably the most highly revered loan by sellers, right? They prefer a conventional loan over a special purpose loan or one of the government-sponsored programs. And the reason for that is because there's a belief that anyone who can qualify for a conventional loan is going to have better credit worthiness, and they're also going to be better capitalized, meaning in terms of the funds that they have for the purchase, right? That's the assumption with a conventional loan. What most people don't know, and this is one of the benefits once you get qualified and start shopping for your home, one of the benefits of working with a NACA in-house agent is that the NACA mortgage is actually a conventional mortgage. So on your application, on your offer letter or your contract, your realtor is going to check off conventional loan. When they're negotiating with the seller's agent, they're going to mention that, hey, my buyer is approved for a conventional loan because NACA is a conventional mortgage. You also have non-traditional loans. Non-traditional loans would be some of those creative products that was more prevalent in the market in 2008 and 2009, like the interest-only mortgages, also the ARMs, adjustable rate mortgages. You know, these are mortgage products where you don't have a fixed payment, or you have a fixed payment for a brief period of time and it resets based upon the market interest rates. You also have hard money lenders, right, that charge very high origination fees and interest rates, and have very, very strict terms in terms of the duration of the mortgage, et cetera, et cetera. Then you have the government-sponsored loans, such as FHA. We talked about FHA, right? 3.5% down. You're going to have to pay what's known as PMI, primary mortgage insurance premium, for the life of the loan. So as long as you have that FHA mortgage, you're going to be required to pay for PMI. You have VA loans, which is probably the loan product that might be most competitive to the NACA mortgage because it's also 100% financing. So it's great. Fortunately, it's only available to men and women of the military. We have any veterans here? No? VA, you are responsible for your closing costs similar to FHA. And there's also no mortgage insurance premiums with that mortgage product. You have USDA. This is loans that's available in more rural communities where traditional lending isn't typically readily available. USDA is also going to have low down payment, likely comparable to FHA. It will also have the mortgage insurance premiums that you're responsible for, and you also have to pay for your closing costs. Okay, So how many people believe that the Naca mortgage sounds too good to be true? I must be really good. I sold you guys on that. In New York, I don't know if we're in New York, but they tell me Long Island. How many people here are actually from Hempstead? Raise your hands, by show of hands. 2? Come on, you got to be Hempstead and proud. Put it all the way up. So 2. How many people from Long Island? Okay, nice. How many people from the Bronx? Okay. BX in the house. How many people from Brooklyn? BK in the house. Is there any place else in New York that exists? Queens get the money long. No, any people from Queens? Okay, nice. And how many people from Jersey? Okay, Jersey, nice. Welcome. I sympathize with you. It was about an hour to get over here. It was worth. Hopefully, I made it worth the drive. So Naca's mortgage is absolutely true. I stand here before you as an employee of the organization. I also stand before you as a Naca homeowner. 4.5 years, I'm responsible for well over close to 200 families purchasing homes through this program. My colleague Laura has been here for about 9 years, so she's probably responsible for 600 or 700 families purchasing homes through this program. So I can assure you that it's absolutely real, and it's an opportunity that is accessible to you, right? It's going to take some work in order for you to grab and take advantage of the opportunity, but once we leave here today, for the most part, the ball will be in your court. It's in writing, yes. So this is step 1 on a 10-step home ownership process, the Home Buyers Workshop. Next step is, oh, Lord, you're getting that pink slip. The next step, yes, log into the portal and then schedule your intake session. Once you go to your intake session, you're going to meet with the counselor. They're going to review all your information. They're going to first start with a conversation about your home ownership goals, like your vision for being a homeowner and the reason you want to be a homeowner, where you want to raise your family or, build your life at, and what community you want to be a part of. And then they're going to put together an action plan with all the information and the items that you need to address, information you need to provide in order to qualify. And then they're going to help you work to obtain a qualification. And then you'll qualify, and that means that you'll start shopping for a home. Once you get your qualification, you're going to attend what's known as the Naca Purchase Workshop. It's a slimmed-down version of this. It's about an hour and a half. We host it every Thursday in the Newark office. Depending on your commute, you may be required to attend in person. If you're 2 hours outside of Newark, then you'll be able to attend virtually. And that's going to be facilitated by a Naca in-house agent. And they're going to provide you with step-by-step guidance on everything that you need to know throughout the home ownership purchase process. And then you'll start shopping. And then you'll put in offers for properties. And for most of you, you will be disappointed. It's going to be very emotional shopping for a home. I mean, walking into this church today was emotional, wasn't it? Like, how many of you got here after 9 o'clock? You wasn't sure if you were going to get in. It was just, a lot of nervous energy associated with it. So you're going to experience that, and then you're going to experience these peak moments of absolute joy and optimism. And it's probably going to be the first time you meet with a counselor, because they're going to show you that your vision is possible and give you a plan to obtain it. So you're going to feel great. Then you're going to start doing the work, and it's going to, reality is going to kick in. But you're going to push yourself forward, and then you're going to meet with your counselor, and they're going to send you documents to underwriting, and you're going to get a qualification. And then you're going to experience tremendous joy again. And you're going to go to the purchase workshop, and you're going to start shopping for a home. You're going to meet with the realtor. Depending on who your realtor is, they may bust your bubble. They may say, you can't afford what you're looking for, et cetera, et cetera. Don't listen to them. Call Laura. But most of the NACA in-house agents, they're going to show you, what's reasonable for you, what you may, where you may need to make some adjustments in order to obtain your goals. And then they're going to help you shop for a home. And you're going to start put offers in, and it's a competitive market. It's still a seller's market. In fact, they don't even refer to the market as a buyer or seller's market anymore. They call it the home freeze market. Like, the market is frozen because you have a lot of people that bought homes or refinanced their existing mortgages during the historical lows, right? So we have a lot of NACA members, as you saw in that video, that have 0.125% for their interest rate. Hopefully they're never coming out of that mortgage until it's paid off. They have even a lot of seniors that would have either downgraded or, families that have expanded or grown would upgrade. They haven't, because their rates are so low, and for them to get a new home or a second home is going to be cost prohibitive. So it's a very tight market. What that means is it's going to be competitive for every property that's listed. You're going to get some denials. Your offers won't be accepted. You're going to regroup, put in more offers. But the home that's for you, you will find it. What God has for you is for you. So you're going to have that glorious moment when your offer is accepted, and then you're going to go under contract. So you'll be at step 5. At that point, you're going to work with a NACA-approved attorney, and they're going to start what's known as the attorney review. What they're going to do is review the contract, make sure that you're represented. They typically decline or disagree with the terms of the original contract, and they go back and forth with the seller's attorney until they come to a final agreement on the terms of the contract, and then you start your credit access process, right? You're going to have the property inspected by a licensed inspector. We talked about that earlier. That inspection report is going to be reviewed by the hand department. Laura's going to send you an email. Congratulations on your accepted offer. I need to see you now. Laura is very, very tough. No, she's a sweetheart. But you're going to meet with your counselor, and your counselor is now going to make sure that you maintain your qualification requirements, right? Whatever your monthly savings requirement is, however much you need to have in savings in total. And then she's also going to evaluate information about the property, right? She's going to review the contract. And at that point, you'll start credit access. She's going to get your file approved for your loan application. She's going to package all of your documents and send it to Bank of America. And Bank of America is going to start their underwriting process, step 8, the mortgage process. They're going to have all of their underwriters review all of Laura's work and the underwriting team from NACA, and then they're going to get in the boxing ring. And they're going to start boxing back and forth. And Laura's going to say, I sent you this. They're going to say, well, it wasn't correct. Get it again. And Laura's going to say, no, I'm not doing it again. But she always wins. And then at some point, you'll get what's known as a clear to close. So the bank and Laura come to an agreement that, yes, this does meet the bank's underwriting requirements, and the bank will issue your final mortgage commitment, and then a clear to close. At that point, you'll schedule a close. You'll come to the NACA Newark office, or you may go to your attorney's office, and that'll be the glorious day when you get your keys and you become a NACA homeowner. So for many of you, that could be as soon as 90 days. Realistically, it'll probably be 6 months. For some of you, it may take a year. For me personally, it took me a year, and I worked for the company. I was an employee and trying to buy, and in the process of purchasing a home through NACA, and it took me a year to prepare my finances and position myself to move forward, but certainly well worth it. And then you move into what's known as our post-purchase program. So at that point, you're a NACA member. As a post-purchase NACA member, you have access to NACA's entire organization. We'll be, leaning on you or dependent upon you to come back and offer your testimonial at the homebuyer workshops. If for some reason you fall into a hardship and you're in danger of, losing your home, you can't make your mortgage payments, you reach out to the member assistance department, and they'll work with the bank to help restructure your mortgage, right? So they'll try and get a forbearance whereby you may be able to forego paying the mortgage for 3 months, and then also maybe restructure your payments or interest rate so that the home is affordable and you can retain your home for as long as possible. All right, at this time, we are going to bring up our testimonials. Kim? Okay, wonderful. Miss Cabot. All right, let's give the lovely Miss Cabot a round of applause. Laura was your counselor? Right here is fine. Okay. Yep.
Hi, everyone.
I have a mic for you. Thank you so much for offering your testimonial. It's a pleasure. Say your name once again.
Thank you. Darlene Cabot.
Darlene Cabot, and you are?
Steve Filicotti.
Welcome, and thank you so very much.
Thank you so much. Okay, so I know there wasn't anybody who raised their hands when he asked if you still believe this is too good to be true. Some of you walking out of here may believe that, but let me tell you that everything that you saw on the screen, no closing costs, no points, no mortgage insurance, your credit score is not taken in consideration, all of that is absolutely 100% true. We closed, the end of this month will be 5 years that we closed. Thank you. And he's absolutely right that your mindset has to change. When it comes to money, looking at what you're spending on frivolous things, really get yourself organized. One of the most important things, and I know you deal with so many other people, but I would come in with one of those accordion folders. Everything was in there. Every bank statement, every credit card statement, car payment, whatever you have as far as expenses go, went in that folder. Labeled it for what it was. Keep yourself organized. The other thing I want to tell you is that the process at times can be frustrating. And you have to realize there are a lot more of us than there are of the counselors. They have hundreds and hundreds of people that they're dealing with. So if they ask you for the same document again, just give it to them. Just give it to them. No huffing and puff, just give it to them, because remember, no matter how frustrated you get, that's a 30-year mortgage. And it's your big one, it's going to be your biggest purchase of your lifetime and your biggest expense of your lifetime. So by going this route, you're cutting your interest down, you're cutting your payments down, than if you are going to try, if you would be successful, to go on the outside. So that's one thing to keep in mind. But I have to tell you that they do advocate for you. If there are any issues, you just explain it away, a letter, whatever it is. But it's the best decision we ever made to go through Naca. The interest buy down, we happen to be very lucky, if you want to call it lucky. We were gifted when Steve's dad passed away, and the house was sold and split between the 3 brothers. We ended up being able to buy down our interest rate. Otherwise, we would have never been able to buy down our interest rate. this is 5 years ago, so you can see we're an older couple. We rented our entire lives. We weren't married at the time, we are now, but we weren't married at the time. So we were living separately, both single parents. We rented. I never thought we were gonna ever get out of renting. All that money you spend on rent, you have nothing to show for it. Absolutely nothing. And then you have to deal with the landlord. Then you have to deal with a lot of other garbage that we go through as renters. But going back to being gifted, we happen to be very lucky. We got a little creative in saving our money too. We looked at different banks. We opened up several other bank accounts. If you're able to find a high interest, high yield savings account, put your money in there. Every little bit counts. If you have a little money on the side, sometimes there's some banks that will give you a, what do they call it? I can't think offhand. Well, they'll give you like maybe $200 for opening this account or $500. That adds up if you're able to do that. Get a little creative if you can. But we were able to buy down our interest rate with the money that we had to 0.125%. We live on Long Island. We live on Long Island. The taxes are more than our mortgage, than our principal and interest put together, our taxes. That's how much we were able to buy down that interest rate. And instead of paying 3 times the amount in what our house would be, what we took out a mortgage for, we're only going to pay really just the principal plus the taxes. But I'm telling you, stick with the program. This is the best program you can ever go through, and spread the word. There are a lot of people, especially today with the interest rate being so high, a lot of people can never see their way out like we did. And the interest rate at that time was like 3.5% at that time. We still couldn't find a way out until we discovered more about Naca, its mortgage program. I'm telling you, it's the best decision. There's also, I don't know if you're gonna touch upon it, but we had done a workshop like this. Then we discovered maybe about a month later about the Achieve the Dream event. At that event, that's where we actually, we ended up doing that event. We didn't have to go through the workshop part again because we were credited for that. But it's I guess it's over the weekend, but you spend a day there where you go through all the steps, everything that could qualify. But they don't, come in the area all that much. So if you see it, jump on it. Your first intake might be a few months from now. Again, remember, there's a lot more of us than there are of them. So be patient with it. Don't get frustrated with how long you may have to wait. Just stick with it, because it's a home you're going to have, your dream. You're going to have your dream.
That day we went there, we were there from 5:30 in the morning till 9:30 at night. And we got the whole thing done in that one day. So we were done, got the key, and then unfortunately I had to go to the hospital, and then she took over everything.
In fact, when the day of the closing, they had the title company come to the hospital, to have him sign, and then I went to the closing. Yeah, but again, just all I can say, the takeaway from this, stick with the program. Stay organized. Get your papers together. You go home today, start pulling your papers. That's the other thing about your mindset and your behavior. Sometimes I can be the most disorganized person, but get it all together. Get yourself one of those accordion folders if you can, or even if they're shoe boxes, whatever it is, but organized. And keep the papers organized and everything. As you go through the workbook, they'll tell you exactly what documents you'll need. I wish you all lots of luck.
Before you go, tell us a little bit about your home.
Okay. So, being that, my husband disabled, we wanted to make sure that we had something that was single, it's a single family, but no steps. So we ended up getting something out on the island. It's a 5-bedroom, 3-bath home. And we love it. We love our home. We absolutely love the home. It's really a dream. It's a perfect layout for us. Since COVID, actually before COVID, when I started getting sick, I started working from home, and it's a split floor plan. So those are the 2 bedrooms on one side. It's where I have my office, and it just works perfectly, because then I don't disturb him on the other side, or he doesn't disturb me as I'm working or I'm on meetings. But it's, a ranch, beautiful. We have about, 0.4 of an acre, property, and we just, it's our oasis home,
What's your favorite part of the home?
our backyard. The backyard.
No one ever says the bedroom. Like, my foyer, my backyard.
Yeah, that gone. I got pulleys set up now.
Yeah.
That is beautiful. Congratulations.
Thank you. Thank you so much.
Thank you.
Thank you
Thank
so
you
much.
very much.
You're
Yes,
very
thank you.
welcome.
Yep. And Laura was your counselor?
Yes.
What was it like working with Laura? Is she as mean as they say she is?
Watch out. No, Laura was very patient. I don't know, you go through so many people. I don't know if you remember, I used to come in there too with my laptop.
I think I was there twice.
Yeah. And no, I'll tell you, the counselors, Laura was amazing. Very patient, advocated for you if you needed something, or even if they don't take score for consideration, but if you have some kind of a late payment, or there's, what's this extra deposit because it doesn't look like it's coming from your income, write the letter. And if it's not good enough after she submits it, okay, let's work it out this way. So your counselor's on your side. Laura's on your side to work with you. So again, be patient with them. They're dealing with a lot of different people, a lot of different personalities that they're dealing with, but they're on your side. Okay.
So do you mind taking a few questions from?
No, absolutely. Go ahead. Shoot away.
They want to hear from you.
Well, go ahead, gentleman in the back. Go ahead. What about what? Oh, flood areas?
Do you have any issues with that?
No, we don't. I mean, as much as when I was renting, I was on the water. I love the water.
I had a brand new car out in front of a house and it was under the water.
But we intentionally went more inland. We're more on the, we're out east. We're in South Setauket, around the Center Reach, Stony Brook area. But we went more inland, away from water. So, yeah.
That's what you do. You look around, you pick, find with something that you're gonna like, that, you check everything out, which you did. And, it worked out perfect, for me, that, when I came home from the hospital, you rolled in the door, no steps, no nothing. Like the other house that we had, that we were renting, had a lot of steps, upstairs, downstairs, all that stuff. So with this, it was perfect when I came home, The building, everything.
The other thing too, I know there's more questions. The other thing about using, one of the in-house realtors, we didn't at the time. I just happened to be lucky because my sister-in-law is an agent. Well, she's an associate broker, so I knew she would advocate for us, and she had to go through to get approved, through the program and all of that, as far as being an agent that can represent you. But use the resources they have. The attorney, oh, that's the other thing that wasn't mentioned. I have to mention. Use one of their, it's not their attorneys, but an approved attorney, because if some reason you don't happen to close on that home, if you use an outside attorney, you still have to pay that attorney. And then you have to go through the process again, and then pay it again. Going through Naca, a Naca approved attorney, if you don't happen to close, you owe nothing. And then you could do it again to go through, for whatever reason that closing or whatever fell through. That won't cost you. So that's another thing to keep in mind. The brand new? No, 1969. Yeah, the house was built, but, we had the inspector and everything come in and,
They made them fix whatever was bad.
right. If there was anything.
Everything, attic, crawl, everything. They went in, everything, checked it all out. Even under the bathroom sink that he found the wire hanging, and he told the guy to fix it and all that other stuff. Someplace nobody would look, open the cabinet door.
Yeah.
Right?
And then they had to provide the proof to Laura.
Yeah.
And then she gave that to the hand department. And, and if it still wasn't correct, just until everything is done correctly.
And the money you lay out for him, you get back at closing.
Right. That's the only thing you lay out initially, is for the home inspector, but that is credited to you at closing.
So was it upgraded to your specifications? Like, let's say if something like the cupboard wasn't the color you wanted, say, and you wanted a gray color, let's say it was white gray. Like,
I don't, I'm not really sure about that. I think it has to be something to make sure it's livable. As far as with the hand department, we didn't change anything. It was only, we've done a couple of things, since we've been there, but I can't answer because we didn't go through the hand department to do renovations. It was just for the inspection, so they can answer that for you.
Yeah, because they'll give you extra money for that during
Right,
everything.
if you need
With
it.
the hand department, if you need any repairs before you move in, because it has to be solid.
So we'll take one more question.
Take both. Okay, all right, so when we went through a workshop like this, we weren't going to have our first intake for 3 months. However, it would have been 3 months plus however long. However, because we did the Achieve the Dream event, from the time we completed that was a total of 3 months. A total of 3 months. So that's why I say if you see that opportunity, jump on it. No, it was the first offer was rejected, but the counter offer wasn't that much different. So, like I said, I did have my, I just happened to be lucky because I had my sister-in-law on my behalf. But again, that's the realtors that they have approved know the program, know it well, and know how to work through it. Anybody else have any? Go ahead. I'm sorry.
From beginning to end, how long did it take us to get in the house?
3 months.
3 months, you were in.
That's what I said. From the beginning, not just application, it was 3 months. Not counting we did the workshop, but after the workshop, we had received the number, we had to go online, whatever it was, receive a number, your Naca ID. And then from the Achieve the Dream event, we got everything done that day to approval.
Because we had to hop on it because that 2-month period, I was in the hospital, doing rehab in the hospital, doing everything. So that's why we jumped on this to get everything done. And then at the end, like she said, they came into the hospital so I could sign.
Plus, I didn't want to wait 3 months for the first intake, but if you have to, we weren't going to cancel that appointment. We were going to go through and wait the 3 months. So if that's the case you have to go through, wait that 3 months. Well, the gentleman, I'll get to you. I'm sorry. Go ahead, sir. You wanted to ask a question? Oh, wait, you did. I'm sorry.
What if you find out about it when it's achieved the dream events, but it's in a completely different state?
That's what we had to do.
We are on Long Island. We went to Pennsylvania.
So it's possible to go to a state that's
Oh, yeah, yeah.
like far.
Yeah.
Yeah, we got a room and just went, set everything up.
How do you find the event online?
Yeah, well, actually, when you go on when you go on to Naca.com, the first thing that pops up, it's like a box over. I think there's one right now in Atlanta and another one in North Carolina going on. Everything. There's a list of documents to check into. Make sure you have it all. And if you don't have online access to your bank account, or if there's something you might have forgotten, make sure you start getting online access. This way you can get it. If you forget something, you can have it printed out right there for them. Say that again? How they can talk to you about that. They'll HUD vouchers, you'll talk to that. Go ahead. Yes. Well, they have it, they hold it for like 3 days. I think it's a Friday to Sunday. What's it? Sometimes more. So that particular one was like a Friday, Saturday, Sunday. We only had to be there the one day. Yeah. We went back for something else, I think to drop something else off just before we were leaving. But, if you have to come back, you can. That's why we ended up getting, we stayed at a cheap place just for, get a room, and we stayed. Thank you.
How much do you have to have in your savings account?
So they're going to talk to you about payment shock from what your rent is paying and what your mortgage is going to be. So that's one. The other is having escrow. So when you close, there's going to be a certain amount of property taxes and the homeowner's insurance you will have to pay. That has nothing. I won't even call that closing costs the way they're looking at that. Those are just necessities that you have to have, because you have to have an escrow for your taxes and your homeowners. I think somebody else had a question. Okay.
So basically, the way that you went to celebrate, you skipped all the processes of having to actually plan. You had everything already done. Like, they were saying that if you go to get counseling and stuff, they'll tell you what you have to budget and stuff like that, but you guys skipped all of that.
So yes and no. We still were back and forth in the Newark office, because even though we had gotten that qualified, that you're qualified, we still had to provide, we were able to, how can you say, start looking for a home at that point. But in that process, there wasn't a home that we had right at that point available, that we liked. So during that process, every week that goes by, you still have to provide your pay stubs. You still have to provide any other new documents that come up during that time that you're shopping for a home. And then at the end, they'll ask for the final information before you close too. Everybody good? Any other?
Since you did the cheap dream event, how did you know your payment shock and all that before the event?
So that's part of the other thing. Our rent on Long Island is expensive. We didn't really have for ourselves a payment shock. I think it was maybe $100. Yeah, I mean, the rent out here is astronomical. So rent out here sometimes is more than a mortgage. The rent we were paying is more than our mortgage right now. But that's even after, they'll tell you right then and there what your payment shock would be. So that's why I said, it might extend a little bit. You need to show that you're able to save that difference every month. And I think an additional $200, I think it is, just for incidentals, in case something breaks down or whatever. So, and that's individual. It's not like the shoe fits everybody, one size fits all. So it's everybody's circumstances are a little different, and it's going to be customized to each person.
In the beginning, while I was working, I had to cut back on my McDonald's and Burger King. No more running to get coffee, that make coffee at home, stuff like that.
That's right.
So I had to watch my budget. That's what you got to do. Learn how to watch your budget. Put this in categories. This way you have everything in order when you go.
You have to show, even if you've had blemishes on your credit previously, remember they're saying score is not taken into consideration, which is true. But if you're consistently still late right now, then you're going to have to prove to them that you can pay on time. So that can extend your the period of time that you go through. So those are just different. That's why I say everybody's circumstances are different, and it's going to be customized, specifically for each individual or family.
Did you have to have a lot of money in the bank?
No, you didn't. Like I said, we just happened to be gifted, thank you, Dad, for that, but you don't. I mean, you do, during the process, you could still be saving, So, for example, knowing that, like I said, you have to have escrow. So the taxes, whatever that's going to be, the homeowner's insurance. So if you don't have anything, until you can get to that point where you can cover that, would obviously extend your process.
What's the main paperwork you for, based on taxes, stuff?
Oh, they'll give you everything. They'll show you what you need, and you just get an accordion thing, which was a lot easier, and you just put everything inside your little categories. And this way you got everything, you know what you got, and you go. Yeah.
Yeah. What's your, yeah. There were some things that we were able to upload, but not everything. But now I saw it. It's everything.
Yeah, everything changed.
Yes.
I noticed the books are even better.
Sweaty.
And ladies and gentlemen, that concludes our workshop. No, let's give them a round of applause. This is by far one of the most informative testimonials and accurate in her depiction of the process and what's going to be required. As Laura mentioned, it has changed a bit now since we operate in more of a paperless environment. So we now have digital banking where you can link your bank accounts and it'll pull in all of your banking data, so you never have to worry about uploading bank statements. We're working to pull in pay stubs and W-2 information. So there's a lot that has changed. But how informative was that testimonial? Okay, so we're in luck. We have another testimonial. Ms. Dominique, would you please come up? Good afternoon. How are you?
Hello, everybody.
Good, good. Your name?
Lance.
Lance.
Yes.
Nice to meet you. And
Dominique.
Dominique.
Levi, our son.
Levi, nice to meet you. All right, Dominique, so I'm going to turn it over to you. You can just talk about your homeownership journey, your process, et cetera, et cetera.
Good morning, everybody. How's everyone doing? I hope well. So Lance and I, my husband, and this is our son. We have 2 daughters. We came here to be a testament to others that are here to encourage and inspire you. As many of you know, you're here looking to take the next chapter, the next journey in your steps for home ownership. And I can't thank Naca enough, because Naca was what we needed. And I say that to say, I'm sure many of you can agree culturally, right? That we have not been taught the importance of credit. We have not been taught the importance of generational wealth and financial literacy. And for me to be a 37-year-old mother of 2 children, Lance and I have our son together. We have a daughter. I have a daughter from a previous relationship, and so does he. So we both come from pretty good families and pretty good upbringings. We're hardworking individuals. I'm a nurse. My husband can share what he does. But we were really tired of the renting. We wanted to change the scenery for our children. We wanted our children to know what it was to grow up in a home. We wanted our children to experience a lifestyle in which they could be proud of, where they can enjoy and be children, and where we were living, not to take away from our humble experience of where we were, but we wanted more. And we worked hard, and we wanted what was considered the American dream. We wanted that, and we deserved that, and our children deserved that. So we said, okay, we're gonna take this step with Naca. And how we learned of Naca wasn't through an event like this, which is great because you can get information, hands-on experience, like down to the T. We actually had a friend, a close friend of mine. She lives in Suffolk County herself. She did the Naca program, and she had been in her home for 2 years. I had visited. I loved her house. I loved the neighborhood. Her kids' school district was great. She had a great commute to work. And I'm like, well, what the heck are we doing? Like, all right, so what did you do? And I guess you have to get to a point where you're saying to yourself, okay, so what's next? How do you do this? Because it's one thing when you hear about it, but when you have friends and family and those that have done it, you're encouraged because you say to yourself, if they can do it, okay, tell me what it is that you did so I can do it. And though everyone's journey is different, you understand, okay, what's the common goal and what is it that I have to do? What steps? So, okay, our friend shared her experience. We said, okay, let's go on the Naca, the website. We found that they had a workshop, and at the time it was 2022, October 2022. And still in the midst of COVID, so we went ahead and went on the workshop online. So it was virtual, it was convenient. So what was the excuse? Okay, we did the workshop. The workshop was for 4 hours, so I'm not even gonna tell you no lie. I went to my son's doctor's appointment like I just did. I did the virtual visit, the virtual workshop online. Got home, and then Lance got to get on the call. So the call for the virtual visit was about maybe 3-4 hours, but it gave so much information. Okay, so now after you finish the workshop, you get your ID. So I said, okay, we got our ID. What's the next steps now? Follow. This was October 2022. So, okay, we get the information, the ID, and then I am able to log on. You get to get your portal. The portal is all the information in which you have to upload documents of what they're requesting. I looked at the portal, and I said, oh, goodness, okay. So we got this stuff we got to do. So Lance and I had talked. We said, okay, we're going to do what we have to do. Let's start getting this paperwork completed. Let's start printing.
I remind y'all, I just followed every step that she did, to be honest. Whatever she told me, whatever pay stub she needed, bank statement, I just let her do everything. Like most husbands or boyfriends are going to do. They're going to allow you guys to take this part over because we are not going to be as structured as we should be. So let her keep talking.
So, no, and listen, this is the honesty that you need, because I'm not going to paint a pretty picture and say that, it's easy. Nothing comes easy. Anything that you want in life, you have to go out and get it. right? You have to work hard. You have to be consistent. You have to be disciplined. So this was October. This was the end of October, as a matter of fact. And we had our aunt who helped raise our kids, who, was pretty much, the pinnacle in our family that helped us with our children. She was terminally ill. She passed in December, just 2 months shy of us starting the workshop with Naca. So she had passed away. And her main focus for us was, and she was a homeowner herself, she said, I want you guys to embark on this journey. I want nothing more for the both of you. So when she passed December 24th on her birthday, 2022. December 25th, I started loading my documents onto Naca. And I said, okay, I was back in school for my BSN. I said, you know what? I have 1 week left before I start back school, which was January 9th. I said, I'm giving myself 1 week to upload all these documents and on the portal. And as you guys have seen, if you have not already done so, if you guys are not already Naca members, I highly suggest you finish this workshop, get your ID, and get on, because the rest is up to you. So I had 1 week. I hounded Lance. I was at work uploading documents, downloading, printing. I was doing everything but working and putting on Naca website all of our information, right? So when you have finished this process, right, once you finish loading your documents, I called Naca. I wasn't waiting for a call. I called Naca. And grace of God, I had a wonderful representative on the phone in which said, okay, we have an in-person meeting available and we also have a virtual. So I said, okay, what's the in-person? Now the in-person, they had mentioned I can go to Jersey, and there was another in Rochester. If you guys are familiar, Jersey, we lived in Queens at the time. I said, I don't want to drive that commute. I'm just being honest. And I said, well, Rochester, that's even further. So let's do the virtual. Another convenience, okay? Again, what's the excuse? So, okay, we did the virtual visit. We set up the appointment. So it was 6 weeks out. So that was January 9th I had called. 6 weeks out, we had the first week of March 3rd. Now this is March 3rd, 2023. We got with our counselor. So we had all our documents. Now the documents I'm speaking of that we had to consistently upload was our bank statements. We had to upload our pay stubs. We had to upload our credit card debt. So if you have credit card debt, as far as you have credit cards, they want those bill payment cycles. They want those uploaded. Everything they want, we provided. So we got to our first virtual meeting with our counselor, and his name was Don. He was at the Detroit office. Don't ask me what happened, why we didn't get the person from New York the first time around, but that was God sent, because Don, hands-on, was totally receptive, understanding. He took his time. We weren't just, a file for him. He really took the time to get to know us with the paperwork before he even sat down and met with us. So when we met with Don, we went over things as far as our rent. We went over our income. We went over our taxes. We went over like child care. We went over anything you could think of. We went over everything. Then we discussed our budget. Fast forward, that was March 3rd. He said he wanted to see us back in 3 months. So for us, because we were renters and we were looking to purchase a house in Long Island, this is Long Island, but we were looking to move to Suffolk, we had to be honest with ourselves as far as what we can afford. And that was really challenging, let me be honest with you, because when it comes down to budgeting, again, these are things that we're not always necessarily taught, financial literacy. So what does that mean? That means we have to scale back. We have to be a little bit more disciplined. My husband likes to dress and likes to spend money, and that means we had to scale back a lot. Okay, we like to go out and eat. We like to travel, but we had to be disciplined because this is what we really wanted. And so that's what we did. So for us, we had to do, a payment shock. And so what we were asking Naca is, we said, okay, it's not enough that you see that we make good money. And what I mean by that is, okay, Lance, you're a correction officer. and me and nursing coming together in a two-family household, we make fairly decent money. But living in New York, guys, is expensive. And inflation, and childcare, and groceries, and everything else under the sun. So how do you maintain? Well, that means we have to budget, and something we never really did. We were really good with maintaining our bills. We were never late on things, but now this is the real deal, because now they're asking you, it's not enough that you tell me you make this, but I need to see the money. Okay? So we had 3 months. The payment shock was, you're asking to purchase a home between $500,000 and $600,000 in Suffolk County. We're looking at the time, the interest rate might have been,
It was like 8 and some change.
it was probably 8?
Yeah.
Okay.
Close to 8.
When we went to closing, it was 8. That's not what we got, but we'll go there in a minute. When we went to closing, it was 8. But at the time, I think the current interest rate might have been about 6 or 7% in 2023, early of 2023. So we're looking at anywhere from a $3,000 to $4,000 mortgage, right? And at the time, guys, our rent was not even $1,000, right? And I'm just being honest. I got to talk about full transparency, because you as the people want to know, right? So, okay, so what do? All right. Yeah, we can afford it, but now we have to show Naca. Not only can we maintain the bills that we currently have, but we can save that extra $3,000. Okay, so that was a sacrifice. That was no random going out, picking up a flight, getting on a flight to go away, okay? I like my Gucci and stuff, can't do those kind of things. All right, we got to scale back. That's what we did. So 3 months, fast forward, we were saving. It was a challenge, yes it was, and I'm gonna be very honest, it was very tedious putting up these documents on the portal, but it was well worth it. We met back with Don in June. When we met back with Don in June, he looked over our finances, and he said, okay, I see 1 month in April, there was some extra spending. And so he said, you know, being fully transparent, you know, what was different in
It was my fault.
he said, what was different in April? And we had to be honest, right? Our son, Levi had turned 5. I said, so we had a birthday party. And we spent some money. So, and I mean, to be honest, it doesn't mean, and Naca, the great thing about them, it wasn't about that they didn't want you to continue your lifestyle. The objective with Naca was, is not only do we want to help you get in your home, but we want you to maintain your home. Okay, we want you to have the savings should something happen. You have some of that cushion. And so it wasn't enough to say, oh, you live in paycheck to paycheck, you're just making means. But they really want you to save. They want you to maintain. They want you to budget. So he pushed us back a month. So in June, when we should have been getting qualified, which meant we could begin the process of looking at houses, we had to be put off for another month. We had to make up that month. And let me tell you why I appreciate Naca for doing that. Because that discipline and structure now, when it comes to us being in the house that we're in, that I'm going to get to, it's just natural now. Naturally, it just comes second nature as far as the extra saving. So I say this to say we got qualified in July 2023. We got qualified. And we began the process of looking for realtors, right? So that we can have assistance with looking at the market, which is very competitive out in Long Island, out here in Long Island, Nassau, and Suffolk. We got with our realtor.
So before she gets to that part, advice for me, for everybody in this room is, you want to go with an agent who is Naca certified. So that's what we also learned through this journey, is because we hired an agent. We hired an agent that was, she got certified just for us because she was a close friend of the family. So we went with her, and we saw the difference. Long Island is very competitive, and we might have seen over like 100 homes with this one agent, right? And I'm not gonna lie to y'all, I fired her, right? And we went with somebody who we was originally supposed to go with, who was Naca certified, and she was on point. Everything we asked her for, she know the lingo with other agents, other companies, because that's the most important part. You want to be with somebody who knows the lingo of NACA and knows how to close a NACA deal. Because a lot of agents out here from all these other companies, when they hear NACA, they're kind of like afraid to mess with people going through this process, right? So dealing with a person that knows the lingo, that knows how to sell and really talk to other agents and also has great relationship with other agents is gonna help y'all out tremendously. What else I was gonna say?
Well, let me go back because he made a good point, right? Many people, and when I speak of many people, I'm speaking of those that are in real estate. Many of those that are in real estate, as far as real estate agents, and when he speaks of NACA qualified, you have the option with NACA either to find your own realtor, but they have to go through NACA's course, where NACA trains them and prepares them to be an advocate for you as far as getting you the best home based on NACA's qualifications and NACA's, what's the best word I want to say? According to NACA's guidelines. Because what I will say is NACA does not play. They're not letting you buy a home that is not safe, that it doesn't meet the requirements and standards, where maybe other conventional loans and other FHA loans will allow you to close a deal and then deal with the headache thereafter. So I say that to say, I'm sorry guys, this is entertainment for a 5-year-old. I say this to say, we went with the first person that he mentioned, the realtor at that time, was a family friend. And sometimes you go referral-based, right? You go by what someone knows, what someone shares, and someone else's experience, but that should not have been the case for us with this particular person. So fast forward, live and learn. We saw more than several. We saw almost, like he said, almost 100 houses. And it was very tiring. And that was long-winded. That was from July to September, and Lance fired her September 22nd, and we went with Nadira Taylor. I suggest if that's something you're interested in out here in Long Island, Google her. You can look her on Instagram, on Facebook, social media, Nadira Taylor from Diamond Mine Realty. That's who we went with. That's who sold our house.
We get paid for that, so I don't want you guys to think that we shout her out because we get a referral or anything, but I'm just from experience, because I know you guys are going through it firsthand, that she just covered all needs that we needed. And this is a, tell somebody to tell somebody kind of program. So that's why we are saying her name, because she did a tremendous job with us. It was greatly appreciated. And I know Dom is going to keep talking, but we love our house. Like I said, we come from Queens. We was born and raised in Queens. And we was in an area that violence is very heavy right now, right? And me, I work in juvenile justice. I'm a juvenile correction officer. So for this opportunity to be with NACA was great, because now I gave my kids something that I see other kids every day that don't have a chance to be with their parents or be in a nice home. So NACA was a great program for me. And as a husband, we don't talk too much, the men, so this is all I'm gonna say, and I'm gonna pass it back to Dom.
So fast forward, Lance fired the previous realtor we had. Yes, she got NACA qualified, which was a family friend. So we fired her. We went with Nadira. We were with Nadira 3 weeks. Nadira found us our house. And thank you. I just want to go back just for a second. As you're sitting here, God knows the desires of your heart. And we wrote, when we started with NACA, March 3rd, 2022, 2023, when we sat down with our mortgage counselor, Don at the time, when we did the virtual visit. Lance and I got off that call. We got a piece of paper, a loose leaf paper. I still have the loose leaf paper. We wrote on a loose leaf paper what we wanted in a house. We said we wanted a 3 to 4 ranch style home. We wanted to live in Suffolk County. We wanted a 30 to 1 hour commute. We said we wanted 2 to 2.5 bathrooms. We asked for a fully furnished basement. We asked for an open concept. We asked for a backyard that was near a quarter to an acre of land. We said we wanted to be in a good school district rating. We also mentioned on this particular piece of paper, and I call this manifesting. We put on this particular paper as to a bonus, which would be a pool. So I'm telling you everything that we wrote down, right? Everything that was on that list. I even asked for a guest bedroom. So I said 3 to 4 bedrooms. The 4th bedroom would be a guest bedroom. Everything that's on that list. But the pool, but that was the bonus. And we have enough backyard. We have 1/4 acre in our backyard. We have enough room for us to do a pool maybe next summer. I say that to say that was through NACA. So everything that was on that list, we told Nadira. We said, this is what we want. This is what we're expecting. This is what we're willing to have a little give and take, a little compromise. And she hit the ground running. She found us our house in Suffolk County. We actually live in Mastic, New York. And our kids' school district, Eastport School District, amazing. My husband is about 20 minutes commute. I have the hour commute, which I'm looking to transition. Okay, everything that's on our list, I love our neighborhood. I couldn't ask for a better neighborhood. You know, it's so quiet, it's like it's a resort. Sometimes I wake up in the middle of the night and I'm like, this is just too quiet. I'm looking for some noise. I'm used to the elevator. I'm used to the people outside carrying on. I'm used to smelling stuff coming through my window, if you get my drift, okay? It is a peace of mind. We have a fully furnished basement. We have a 1-car attached garage to our home. We have 4 bedrooms, 2 bathrooms, open concept, a ranch style. We live in a very quiet neighborhood. The neighbors are very nice. It is, to me, a very cultured neighborhood. We're close in proximity to the Walmarts, the Targets, ladies, the grocery stores. You know, the gas station is important because when you live out there, it's not as accessible. So I say this to say, we found our house October 16th. The house went on the market October 15th. We put in our offer October 16th after we saw the house. Our realtor put in the offer. We got our call back Monday morning. We actually have put in an offer on another house in Patchogue on Saturday that we had options. Isn't God good? We had options. Two callbacks that we had to make a decision. Nadira said, so which house did you guys really like? And I'm like, I love the Mastic house because the Mastic house was newly renovated. Newly renovated. When I talk about turnkey, I had to do nothing but move my stuff in. So fast forward, we went to closing. We closed December 15th. We were supposed to close November 17th. There were some things that happened. There's called the underwriting process, as many of you will get to know if you're not privy to. The underwriting process that NACA prepared us for with Bank of America was pretty crucial. When you say NACA went over everything, the underwriters went over everything. And that was tedious, and it was nerve-wracking. And Lance said, I'm over it, I'm tired. And I said, no, we got to hold on a little bit longer. God got us this far. He didn't get us this far. Come on, we got to hold on tight. I say that to say we were supposed to close November 17th, but nothing happens by chance because there were other things that NACA made sure happened, which were a few intricate things, which is called your repair rider list. There were things that the inspector and that the actual appraisers and those that work hand in hand with the NACA hand department will say, hey, this needs to be fixed. We're not going to close until this is done for the member. In particular, we had a handrail and a guardrail that needed to be from the garage going down to the basement. I can't have nobody slipping and falling on my property. But NACA made sure that was taken care of. Now, would we have thought of that? Absolutely not. What do we know? Okay, NACA made sure of that. What else was it on there? Do you remember?
Something with the boiler. The boiler wasn't, it had like a leak, but it was only a leak because it hasn't been running for a while. So they even bought somebody else to make sure that the boiler and everything was working correctly before we actually took over or went into the process of the house. One other thing I'm gonna say to the men, it's a tedious process, you know what I mean? I'm Muslim. I think I prayed about 10 times a day instead of 5. I made sure I went to Juma every Friday because the underwriter is going to keep what's this, what's that. They're going to be very they're gonna go in so deep about how you spend your money, and I never was used to that, of course, because from our upbringing, we don't have people questioning us about how we spend our money. But I used to be like, what do you want now? Why is he calling? He has everything. It's right there in front of him. But they want to know, then you got to write, just get your letters prepared for every little thing that you have that you spend your money on. Just make sure you cover yourselves. So during that time of going through the underwriter, my advice, don't spend no money, right? Just save your money. Just only spend money on going food shopping. That's about it. Or your car note. That way you can explain that. Me, I like sneakers. I like to have my kids with sneakers. So I would try to sneak, and it didn't really work out for me, great, because I had to go another month without looking at houses. So
He had subscriptions too. Subscriptions, those Prime Video and Disney Plus and Zoo. What is it? Hulu.
that was for the kids. But all that little stuff, just make sure you guys just watch that, because the underwriters pay attention to every little detail about how you spend your money. And of course, this is my first time going through the home process, so I thought that I could get away with certain things, and I couldn't at the end, so just watch that.
So listen, I say that to say I can go on and on because this is a very proud moment. I'm still in bliss. It's 3 months later. I'm still in bliss. When they called me, Miss Kim called and said, I'd love for you to give a testimony and share your story. I said, okay, I'm coming. No questions asked. And I say that to say because I think we need to hear more people speak about this experience. I think that if we spoke more to one another, unfortunately, culturally, it's like crab in a barrel. It's a gatekeeper, you know. You don't want to share the story because, yeah, I want to see you do well, but not better than me. And this is a journey that we all can embark on. It's home ownership. It's obtainable. You desire it. God places it in your heart. You can do it. And I say you can do it because hard work and discipline, you know, you apply the pressure. You know, I share with my children. My husband likes to watch basketball. I'm sure many of you men here do too. The game knows just how much you put into it. So what you put into it is what you're going to get out of it in return. And I say that to say, with Naca, they prepared us to be in this experience, to live this moment that we can speak of truth. And I say that to be an encouraging and uplifting and motivating factor for you, because sometimes you just need the push. So today I challenge you all individually to take that leap of faith, because what's the greatest investment? Yourself. In your families. And Naca is the liaison. They're here, they're meeting you. You got to meet them. And they're going to meet you where you are. So don't be discouraged. My story is my story. Your story is going to be different, and so is yours. But take the leap. And what I can say is we had Don from Detroit, and when we went to get qualified, we went through Michael. Michael was here in the New York office. And Michael guided us the rest of the way. And that was to me the most tedious part as far as when it came down to the underwriting, because it became very crucial as far as, it was like time is of the essence. And I didn't want anyone to wait on me to say that we prolonged this process because we were hungry. When I say hungry, I got so tired of my apartment, I'd pull up into the parking lot, to the parking space, like, God, I was praying. My kids will tell you I'm crying, tears coming down, streaming, like, God, I'm believing, I'm trusting in you. And as I pulled into the parking lot, I wasn't pulling in the parking lot. I was pulling in my driveway that I pull in as we speak. That's what I saw. That's what I envisioned. And so I had to keep my eye on the prize. And I say that you're going to have to lock hands. If you're doing this with your husband, your spouse, your significant other, your mother, your sister, whoever you're doing this with, you got to be on one accord. Lock hands, get disciplined. Because Naca is going to challenge you. And that's what you need. You need someone to hold you accountable. So when we would meet with our counselor, this wasn't play. It's either you want it or you don't. And I say when Naca meets you where you are, it's because everyone has different experiences. Everybody has different things going on. Maybe you don't have debt. Maybe you don't have much credit. It's not about the credit. It is about, and my experience of what we've learned, is not just about the credit, so to speak. It's how you pay your bills, how you manage them. Are you paying them on time? Because the creditor, Bank of America, that we have is looking at that. Are you going to pay your car? Are you going to pay your mortgage? Or are you gonna go out and buy the sneakers and take the vacation? Are you gonna trip out on McDonald's or the, I don't know, what's the stuff that everybody likes to eat? Chick-fil-A, I don't know, whatever it is. They wanna see consistency. And I will say one thing that I did appreciate at closing is we got some money back. And when we got some money back, we got to put some furniture in our house, you know?
To me, that's the most important part too, because you hear your payment shock on what they're requiring, because everybody's gonna have their own different levels of payment shock. Don't be afraid of that, because your payment shock, once you finish this process, the payment shock may furnish your whole crib, where you don't have to go to these stores and get store credit for your furniture and all that. So then you come out debt free. So, appreciate the payment shock. That's what I would say, because the payment shock helped us out a lot. It helped us at closing. We got some more money back. We was able also to put some money down on the house as well. And then the money that we got back, and also we had in savings, it was enough to furnish our whole house. So we didn't have to come out of pocket. So you just think about things that you guys want in your house. Like she said, she used to imagine pulling up in the parking lot, coming into the house. Me, as a man, I wasn't so excited until I got the house, right? Because I was just like, okay, cool. I'm just gonna work. I'm gonna do this. I'm gonna do that. Make sure the payment shock is good. But once I got the house, I got excited because now I got a man cave, right? And I could block them out when I want to. So it became cool to me. Now I'm like excited to have a home. And one thing is that I got excited about through Naca, that we didn't have to go through family members to ask for a couple of thousand to give us to purchase a home. We did this on our own because I had family members before. Like I had a grandmother who had a great job, right? And she had 3 kids. My mother and my aunt and uncle, they used to go to her a lot because she had a good job. So when they got their houses, she gave them money for a down payment. So for her to see the smile, like, yo, you did this on your own, was the best. So I had to thank Naca for that, for holding us down to get us to that point, that we didn't have to ask nobody for no loans. We didn't have to do all that stuff. We got this on our own, blood, sweat, and tears. So I want to see everybody, go through this journey the right way. Like my wife said, this is not like a crab in a barrel kind of thing. This is, Naca is tell one, teach one, each one teach one. So let's get it together so we could build our community up and teach our kids how to get into real estate themselves.
Thank you so very much for your testimony. I'm humbled. Let's give them a round of applause. Wow. We've had some true gems today as far as the testimonials. I couldn't be more pleased. You guys are very, very fortunate to get the insights firsthand from the individuals that you have today. So we're going to move forward with the workshop. I'm going to turn it over to our Naca in-house agent. Kim, do we have an IHA? Okay, no worries. So I'll talk a little bit about the Naca real estate department and the importance of working with a Naca in-house agent, and also some of the things that you want to look for in an agent. And Lance and his wife spoke very adamantly about some of the things that made the difference between their accepted offer and the offers not being accepted, right? So you want to make sure that your agent is knowledgeable, right? One of the benefits of working with a Naca in-house agent is that they're knowledgeable on the Naca mortgage. They have direct access to the Naca staff, Naca counselors, and they know how to negotiate and position a Naca mortgage against other competing offers. You also want to make sure that your agent has closing experience, right? So one of the questions as you go through what most agents consider to be a buyer's consultation, right, is where, you sit down and you have a conversation about your home ownership goals, and Lance and Dominique discussed that a little bit. You want to ask, how many deals have you closed in your career? How many deals have you closed in the last year? And how many Naca deals have you closed? Now, If you're working with a NACA in-house agent, they'll be able to speak to how many NACA deals they close. If you're working with an outside agent, they may have little to no experience. You also want to get an idea of the availability, right? Availability and communication style was of the utmost importance to me when I was shopping for a home. One, I want to feel like I'm the only client that you have, and I want you to be able to communicate with me at the drop of a dime. So availability, ideally you want to work with an agent that's a full-time agent. This is what they do for a living. It's hard to work with a part-time agent. Now, the market is very challenging, so a lot of agents have had to find opportunities to supplement their income, during the slow periods. But for the most part, you want to work with an agent that's available, that's available and that works full-time. You also want someone that has strong negotiating skills. Again, Lance and Dominique spoke to how that made the difference between the 100 other homes that they saw and the first 2 homes that they saw with Nadira, right? And how she was able to negotiate and position the NACA mortgage to be successful. Communication, right? You want to be upfront about your communication style. What are your expectations in terms of an agent response time? If you call, you send a text, you leave a voice message, when do you expect the agent to respond? You expect a response in 24 hours, 48 hours, or like me, within 4 hours, right? What's going to be your response time and what's your preferred method of communication? You want to have those conversations early on in the process so this avoids issues going down, further down the line. And this way if you can have a good working relationship with that agent. One of the other things about working with the agent is you want some disclosure on the fees. Now, in New York and New Jersey, there's a lot of regulatory requirements about the types of fees agents can and cannot accept, but you still want to have an upfront conversation. One of the benefits about working with a NACA in-house agent is, regardless of whether your home is $50,000 or $500,000, they're paid a flat fee. Most agents, outside agents, they're paid a commission, a percentage of the sales price. So the higher the sales price, the higher their commissions, which could be a conflict of interest at times. And then you also want to have something contractual. Ideally, you'll sign a buyer's representation agreement which specifies the working terms, right? The terms of the contract and the working relationship between you and your agent, so it leaves a lot less up to chance. Yes, sir.
The real estate agent's fee rolled up in the mortgage, or is that separate?
Yeah, so the real estate agent fees are always paid by the seller. Typically, the seller is going to list the property unless it's a for sale by owner, but more often than not, they're going to list the property with an agent that works for a broker. The typical listing fee is probably maybe about, depending on the purchase price, somewhere between 4 to 6%. And when the loan closes, then that seller has to pay that 4 to 6% of the sales price to the listing agent, and then the listing broker, and the listing broker will split that with the selling broker, which would be the broker that's representing you. Yes. Yep, you're talking about our home ownership through public housing assistance. I'll get to that in a little more detail later. Yes, correct. We're going to cover that a bit. Yes. I'm sorry. You can buy foreclosures with NACA. Okay, so I have to renege on my promise. We're not getting out here at 12:30. It's going to be more like 1:30, all right? No, we're still going to try to wrap up by 12:30. So these are some of the benefits of working with a NACA in-house agent. They're going to be paid a flat fee. They're held to the NACA's standard in terms of, fiduciary responsibility to make sure that they're always putting the interests of the NACA members first and foremost. They're going to have experience and expertise in negotiating a NACA mortgage, and also they'll be able to help you negotiate some of the affordability hurdles. Once they have an understanding of your income, your expenses, and your assets in conjunction with your counselor, they'll be able to help you determine, what you might need to tweak in order to afford a specific property that might otherwise appear to be unaffordable for you. Here's some of the other services that an in-house agent would provide. Document preparation service, right? So that's much of the heavy lifting throughout this program is really documentation. Now, as you're going through the qualification phase, you're going to work primarily with your counselor. You wouldn't have any assistance from an agent in terms of document preparation. But once you're under contract, your agent will act as a guide and an aid to help you with your document preparation. But you all should be experts at that point because you've already gone through the qualification process. They can also help you to prioritize your counseling sessions, right? So, as you start to work on your portal, and if you engage with a NACA in-house agent and you have a direct relationship with that NACA in-house agent, they have the opportunity to reach out to Laura or I and request to get a priority appointment for you. They're also going to take what's known as a community shopping approach. They'll start with a buyer's consultation, and then they'll discuss their approach to community shopping, which is, you're not just shopping for a home, you're shopping a community. So they're going to provide some guidance about, how to evaluate a community, different online resources to get crime reports and school performance reports, and also, different times of the day to visit the neighborhoods that you're interested in. The neighborhood may be a completely different neighborhood at midnight on a Saturday versus 12 o'clock on Sunday. Everybody in church, but they was at the club last night, and then they park on the streets and start partying. So, community shopping is going to be important. Also, NACA in-house agents solely represent NACA members. We also, on the buy side, we also work with NACA members that are existing homeowners that might be interested in selling their home. Or if you're new to NACA, you're an existing homeowner, and you want to sell that home so that you can buy your next home with NACA, you can also work with a NACA in-house agent to list your property. Yes. No. So you could make $1 million a year, $2 million a year, or you could make $30,000 a year or $12,000 a year. Everyone's going to be eligible through this program. Now, if you have $1 million annual income, your requirements are going to be a little different. Your interest rate will be a little different than someone who's considered a priority member. And we talked about that a little earlier. Yes.
So what if you're a city employee? Is there any advantages to that?
City employee? In what aspect? Which city do you work for? New York City? Oh yeah, we give out free houses if you work for New York City. No, but yes, you do have the benefit of job stability, also union, right? All those good things. It doesn't change your process. You're still going to be held to the same standards as everyone else. You can also do research with your employer to see if they have any, employee-related grants. For a lot of our members, we do partner with grant organizations, and they can use the grant funds to buy the interest rate down, just to increase their affordability and cover some of those prepaid costs that the first couple mentioned about prepaid property taxes and homeowners insurance. Yep. Mm-hmm. All right, so now we're going to get to a major part of the process, which Lance and Dominique spoke to as well, which is budgeting, right? So by show of hands, how many married couples do we have here? How many proud married couples do we have here? Like, you got to put it all the way up. Keep them up, please, if you don't mind. Anyone that's been married for 5 years, keep your hands up. Okay, congratulations. You survived that first 4. Anybody married for 10 years? Okay, nice, nice. We're down to 2. Oh, no, 3? 3? Anybody married 20 years? 20 years. Wow. And your lovely wife is here with you today? Come on down. Would you be so kind to go through a quick budgeting exercise with us? And since I don't have any seating here, you can do it from where you're seated now, if you don't mind. Well, at least let's stand up so everybody can get a look at the lovely couple. Come on. So it's Mr. and Mrs. Joseph. Well, welcome, and it's a pleasure to have you. Congratulations on your 20 plus years of marriage. You must be high school sweethearts. If you got 20 years in the game, you must be high school sweethearts. So I'd like for you to volunteer for a quick budgeting exercise. So feel free to just use random information, or if you want to use your actual information. We're just going to go through the budgeting process, which is probably the foundation of preparing. There's going to be a lot of valuable information. Someone asked the first couple, well, how was it that they knew their payment shock savings? You asked that question. Before they achieved the dream event. I'm going to give everyone their payment shock savings today, so you can start working on it, right? And the Josephs are going to help us do that. So anyone an accountant here by trade? Now everybody's scared. No one? Anybody that hates numbers? You hate numbers? Anyone that loves numbers? All right. I need a volunteer for an accountant. You'll do it? You're in Treasury? Oh, same tomatoes, tomato. Do you mind acting as our accountant? Okay, fantastic. So there's a few things that you want to write down. The first is going to be how to calculate you can sit down. I don't want to keep you standing. Thank you. How to calculate your gross monthly income. The acronym for that is GMI. This is going to be important. You need to know how to calculate your gross monthly income in order to calculate your maximum affordable mortgage payment, and then to be able to calculate your payment shock savings. So, gross monthly income, write this down. If you have an annual salary, just take your annual salary and divide it by what? By 12, okay? If you're paid hourly, take your hourly rate times the number of hours you work per week times 52 weeks in a year. Whatever that number is, divide that by 12. So everyone should calculate their gross monthly income right now. Yep, annual salary divided by 12. Gross is before taxes. So annual salary divided by 12, and if you're paid hourly, take your hourly rate, multiply that by the number of hours per week you work, then multiply that number by 52. And then divide it by 12. That'll give you your gross monthly income. All right, so once you calculate your gross monthly income, now we want to calculate what your maximum affordable mortgage payment is, right? For NACA, the maximum monthly payment that an underwriter will qualify you for is 33% of your gross monthly income. So whatever that gross monthly income number is, multiply that by 33%. That's the maximum monthly mortgage payment that NACA will qualify you for. It's 33% of your gross monthly income. So let's say your gross monthly income is $10,000. Multiply that by 0.33 or 33%, you get $3,333. That would be the maximum monthly mortgage payment that you can qualify for. That payment determines how much home you can buy, okay? Times 33%. can't use your Airbnb rental income for qualifying income. Yep. And we'll talk about eligibility in just a few. Yes? Use the average. Take your whatever was on your 2023 W-2, divide that by 12. That might be easy. So for somebody else who works a lot of overtime, you have a history of overtime, look at your 2023 W-2, divide that by 12. That'll give you your gross monthly income. Yes? So when we talk about affordable mortgage payment, we're going to start with your gross monthly income. But then we're going to go through this budgeting exercise to see if your net income actually supports you being able to afford that payment. Right? And that's why we're going to do the budgeting exercise. So now you're going to calculate your payment shock savings. So write this formula down, or write this down. Payment shock savings, you could put PSS, payment shock savings equals maximum affordable mortgage payment, which you just calculated, right? Minus rent. Right? So let's say if your maximum affordable mortgage payment is $4,000 and your rent is $2,000, payment shock savings is $2,000. Payment shock savings is your maximum affordable mortgage payment. The payment NAC is going to work to qualify you for, minus your rent. That's the payment shock savings. That's the amount that NAC is going to require you to save for 3 consecutive months before you get qualified. Payment shock savings. Did you write it down? Can she cheat off of your paper? Neither one of y'all wrote. Y'all sitting right in the front, too. Oh, you wrote it down. Can she cheat off of your paper? Okay, so payment shock savings equals maximum affordable mortgage payment minus rent. That's the payment shock savings, okay? All right, so now we're going to use the Josephs, and we're going to go through a quick budgeting exercise. In my experience, and I'm sure Laura can attest to this, you know, it's stated here that for most people, they don't know where 20% of their net income goes, their take-home pay. I can tell you how many times I've given someone an action plan, told them exactly how much they have to save per month, and asked them to return in 3 months to show me that they saved the money. And as it was so good to hear Dominique and Lance attest to their experience, and then they fall short, but they don't really realize that they fell short, and actually it can be a bit combative. So what I started to do was just go through every transaction in their bank statements and add them all up in front of them. And literally say Uber, 15, Grubhub, 30, what's that, Afterpay, Klarna, 25, until we see the total amount that they spent. And I say, okay, so we agree that you spent $3,000 this month. And then we go to your pay stubs. I can see on your pay stubs, we're both looking at it. Your net income was $2,500, but you spent $3,000. So how did you save $500? You didn't. You actually spent $1,000 more than you actually had. Well, you spent $500 more. So we're going to go through a budget exercise just to talk about the approach to budgeting. So Mr. and Mrs. Joseph, and I'm sorry, your name, ma'am? Georgia? We have Georgia as our accountant. So we're going to start with your maximum affordable mortgage payment, which is how much? $3,500. So Georgia, you want to make a note of that? $3,500 is their maximum affordable mortgage payment. And your rent is how much? You have a mortgage. Okay, excellent. And how much is your mortgage? Your mortgage is $3,500. Oh, they're not going to be any fun. So mortgage is $3,500, which is, you know, a substitute for rent in the payment shock equation. The maximum affordable monthly mortgage payment is $3,500. They currently have a mortgage for $3,500, so their payment shock savings is it's zero, right? Hypothetically, let's say they wanted to qualify for $5,000 for their upgraded home, and they currently pay $3,500. Their payment shock savings would be $1,500, right? Okay, great. So when you budget, you don't budget from your gross monthly income. You budget from your net income. So that gross, you always have to pay who first? You got to pay Uncle Sam, right? Uncle Sam might be taking, on the low end, he might take 12%. He hitting you for 40? Yeah, 30%. Even 30 is a little high now since, I mean, that was one good thing Trump did for us. He made the tax code simple. It was like 3 brackets or something like that. Okay, yeah. All right, sorry I mentioned Trump. So you have to pay taxes. You actually live and you're going to pay your mortgage and all of your household expenses from your net income, right? So everyone should write down their net income. And Mr. and Mrs. Joseph, what's your net income combined? Yes, net monthly income. You can give us an estimate. 10,000. This is after taxes, what you bring home? All right, that's a nice even number, about $10,000 after taxes. That's their net income. And what's your highest monthly expense for most people is what? Rent, mortgage, right? So we know that their mortgage is $3,500. I'm going to just say rent so it's more meaningful for everyone else. So rent is $3,500. So after they pay the rent, how much do they have left? So they have $6,500. What's the next largest household expense for most households here? Right? It could be your monthly debts, depending on whether or not you have a large car payment. It could be student loans, right? So if it's your monthly debts, whatever your total monthly debts is, you can deduct that. But for most people, it's what? It's food. Right? Most people underestimate how much they spend on average per month for food. So, Mr. and Mrs. Joseph, on average, how much do you spend for food? Everything that you consume on a monthly basis. How big is your household? You have a household of 5. And you have small children, teens. You have a 13-year-old and a 14-year-old? And so you have a daughter and you have 3 girls. Okay, so they're not really eating you out of the house in the home. You got lucky. We had some teenage boys. Like they want steak and shrimp every night. So on average, how much for groceries then? $900. That's just groceries. What about, dining out, entertainment? In the 900? That's not bad for a family of 5. She's working. You getting your own Naca ID today, right? Is she gonna get her own Naca ID? We should talk. Yeah, she should get her own Naca ID, and we'll talk afterwards. I'll tell you why. Yeah, she should get her own. Okay, good. So 900 for groceries. Back then, they're down to 5,600. You're still looking good. What's the next largest household expense for most families? Right? So I would say utilities, if you're including cell phone, internet, and cable, along with gas and electric. Right? That will all fall under utilities. So on average, how much are you spending for cell phone, gas, internet, and electric, and cable? Do you still have cable? You still got like the black box with, yeah. Yeah. Okay. You gotta cut the cable, cut the cord. Yes. No, you're going to continue that up until you close on your home. So the way we look at it is payment shock saving, you're practicing paying your mortgage before you have it. Like, I mean, those testimonials, it covered so much. You're practicing, that's why they were so prepared for their mortgage, because they had already been paying it. But fortunately, during that time, you're saving the money. And I'm going to use that, Laura. Like, think of your payment shock savings as the money that you're going to use to furnish your home. Yeah, that is a nice psychological spin on it. 800 for, woo, everybody got iPhones, huh? What's the latest iPhone? Yep. Oh, that's right, yeah, because you own a home. So, yeah, there's a lot of utilities. So you said about 800? So 800. All right, they're down to 4,800. All right, now they're coming down to the rest of us right now. Getting a little. All right, so what's the next highest expense for most households? Car insurance, possibly. Yep. If you have life insurance. So let's talk about travel, right? Normally we would say gas, tolls, and car insurance all fall under travel, in addition to public transportation. So how much do you spend on average for those items? And then for those of you who have small children, childcare might have been right next to rent, right? Because childcare, especially in New York, it can be very, very expensive. That's a whole nother salary. Like, nah, one parent's staying home. Okay, about 500 for transportation. We're down to 4,300. Okay, what's the next major expense for most households? I love that. I've never heard anyone say that. Say it again loud. Emergency funds. So that's just, it's a monthly savings, right? That's going to be your payment shock savings now, though. You committed to that emergency fund. I love it. That would be considered part of your savings, especially the Roth 401k. You know, that's a counseling decision between your counselor, but your counselor can give you credit for that. Ideally, we like for you to try and pay the savings shocks or save from your bank account so that you know whether or not you're going to have to make adjustments to how much you save in your 401k. If you need to look at your 401k to meet payment shock savings, then you know once you close on your home, it's going to be difficult for you to make your mortgage payment unless you reduce how much you contribute to your 401k. So transportation, next highest monthly household expense. We would consider that savings. You find out you're doing crypto. Personal care. No one ever wants to admit personal care. Like, y'all just woke up like this, right? Yeah. Right? So, personal care, which includes, the cost of nail, hair, also clothes shopping, et cetera, et cetera. Now, Mr. Joseph's, he looks like he's in my club. We ain't see a barbershop in a nice little minute. But even for the men nowadays, like my brother over here who falling asleep. He got the full beard, nice goatee. How much they charge you when you go to the barbershop? 40? And that's what? That's twice a month, or you going 3 times a month? 3 times a month. I don't even go to the barbershop, but I know. 3 times a month, that's 120. Ladies, we catching up with you. I'm telling you, the men personal care budget would catch up with y'all if it wasn't for those lashes. When they threw those lashes in there, they got y'all with those lashes. The terrible thing about the lashes, though, because once you go, you can't go back. When you take them out, your original lashes be gone a little bit. Or is that only if you ain't get the right ones? So, they got you. You got to keep getting lashes now. So personal care is definitely, between food and personal care, that's where most people spend the majority of their money. They want to look good and they want to feel good. And for most of us, feeling good involves eating or drinking. So for personal care, how much would you average per month? This would be nails, hair, mani-pedi, eyebrows, eyelashes, the facial. Yep. Yeah, they do the massages on the bald heads now, right? Look, he get one. I haven't had one yet, but I'm going to try it out. I don't know. They look pretty good, though, didn't they? Lance and Dominique. So they did something right. Perfumes and cologne. You got to put that on the Christmas list. Like that. How much do we have for personal care? Oh my God. But you have locks? Braids? Okay, yeah, so, yep. So for the personal care for the Joseph household, which is a family of 5 and 4 ladies, we're going to say undisclosed. We're not even going to disclose that one. Let's just estimate $3,000. Now, let's give a nice estimate of, I would probably say maybe about $800 a month on the low end. That's being conservative. Okay, $3,500. Everybody ate. The roof is on, lights on. Mr. Joseph, you're doing good. Lights on, stomachs full, everybody looking good. What else is there to do? What else is there to do? Yeah, we got the utilities, everything. I mean, they blessed. You got to give back. Time to go to church. Those tithes, 10%. Let's go. Let's talk about it. So that's a whole nother $1,000 you're supposed to be giving. Because they want it off the top. That one's not coming off your net. Yeah, so that's $1,000. We're going to say hypothetically. They doing well. Pastor Norm, too. So they giving $1,000. How much left? $2,500. Any other expenses, like regular expenses? Yeah, so depending on that, healthcare, ideally you'll have healthcare from your employer. If you get it from the marketplace, then you're paying out of pocket. But, for your co-pays, prescription medication, definitely want to factor that into your budget. But there's another guy. I would probably rank him right next to Uncle Sam. Because Uncle Sam is obligatory. He gonna get his money regardless. But there's another guy who's more discretionary, but like he's so covert in your bank accounts. Like you don't even know it. Who? Who said it? Stand up. Give that woman a round of applause. She said Jeff Bezos, the CEO for Amazon. The inventor of one-click pay. So yeah, when you look through your bank accounts, you might be surprised on how much you spend on Amazon per month, right? So that's another thing that you want to evaluate. Typically, when you go through your true budget, this is the workshop budget exercise. When you do your true budget, you want to evaluate your spending, your bank statements for the most recent 3 months, and then also your credit card statements as well. And any other, cash purchases that you might have. to really get an idea of how much you truly spend each month. Some other things to be aware of, if you're using, anybody use Afterpay? Come on, let's keep it real. Keep those hands up. Klarna. Who's using Klarna? Who's using Affirm? I've never used any of them, but I know all of them by name. So what you want to do is just, unless it's absolutely necessary, you want to avoid using those services. You should only purchase consumer-related items with money that you can afford to spend at that very moment. Otherwise, you should defer the purchase. When you meet with Alora, she's going to evaluate your bank statements, and she's going to provide you some guidance and tell you have to stop with Affirm or Afterpay or Klarna, because it could come back to haunt you when you get to Bank of America and go through their underwriting process. Now they want you to explain those debts, and not only that, they want you to provide 12 months of on-time payments, but the payments are only what? No, but how many months? It's usually like 3 or 4 months. They want 12 months of payments for a debt that didn't exist for 12 months, so you have to go through hoops to explain it and justify it. The best way to avoid a problem is to avoid a problem. You know who says that, right, Derek? So right now we're left with $2,500. Most major household expenses have been covered. They have significant surplus, so they're in a very, very strong position financially. And their current mortgage payment, or what they deem to be their maximum affordable mortgage payment, because based upon a 33% ratio, they can afford more. But he just gave us their actual scenario, right? $3,500, they're paying their mortgage, and they can still bank about $2,500 per month. It's a very, very strong financial position. So typically, when we go through this budget exercise, if I determine just based upon their stated information, I would say that they probably could afford, for their maximum affordable mortgage payment, probably be closer to $5,000 per month. It would be closer to $5,000. They currently pay $3,500. That means their payment shock savings is $1,500. Based upon the high-level budget we just went through, they do have the capacity to save the $1,500 per month and still be able to live their lives, right? So that's the reason for this workshop budget, for you to kind of go through your budget at a very high level, understand what your payment shock savings is, see if it's feasible for you. If it doesn't appear to be feasible, when you meet with your counselor, or now that you know in advance what you're going to be required to save, you can start looking at areas where you can cut back. What's great about this is having this information now, working towards your payment shock savings now. When you meet with a counselor, whether it's 2 weeks from now or 45 days from now, you'll at least 2 weeks from now understand what's going to be required and have started working on it. And if it's 45 days from now, you'll at least have at least 1 month of payment shock savings shown in your account. Counselor gives you your action plan, say, hey, you're on your way, come back in 2 months, instead of coming to this workshop today, dragging your feet to get your documents uploaded in the portal. You can't book an appointment till you upload your documents in the portal. So let's say you wait 30 days go by because you still ain't do your taxes. You're like, nah, I gotta do my taxes first. So then 30 days, you upload all your information in the portal. It's the height of the spring shopping season, and Naca is flooded with interest. So now you can't get an appointment for another 45 days, maybe even 60 days. From the time you went to the workshop to the time you meet with a counselor, now turns out to be what? 3.5, 4 months. How long did it take you to get to this workshop? How long ago did you register? Okay, good. Sometimes members are waiting, a month or so to attend the workshop. So you got the month you wait to attend the workshop. You go to the workshop, you wait a month to upload your documents, and when you get your documents uploaded, your next appointment isn't until 45 days. So you're talking about 3.5 months just in that time. Then you meet with a counselor, and they tell you got 3 months payment shock savings. Now you got another 3 months, so now you're 6.5 months in before you might even start shopping. But everyone here is going to upload your documents. Lawyer, you're getting your pink slip. Everyone here is going to, Yeah, you definitely getting a pink slip, boy. Yes.
Okay, I have three questions. My first question was, the underwriting, they go back 12.
Wait, before you go on with your questions, were there questions about the budget? Yes. Did you have questions about the budget?
I guess it includes the budget. So I wanted to know, like, for the savings, are they going back 3 months or are they going back 12 months? Like, as far as to show, you know,
Most cases is going to be 3 months. If you're self-employed, payment shock savings is 12 months, averaged over the 12-month period. They're going to look at how much you had in total in your bank accounts 12 months ago versus how much you have today and divided by 12.
okay, and then, as far as the payment shock showing that, does it have, like, say you already have savings, right? Do you have to put it in a separate account or you can add?
No, ideally you won't open any new accounts. Use your existing accounts. Most people have a checking and savings account. Save your payment shock savings in your savings account. Just move it from your checking to your savings account. The best way is to focus on the monthly budget. Because what happens is you're going to have income coming from other sources of money. Like somebody might send you a Cash App or Zelle. That's not going to count towards your payment shock savings. So the best way to do it is the way we just did it. You have your net income. Let's say your net income is $5,000. Your payment shock savings is $1,000. How much do you have to live off of? $4,000. Make sure you don't spend more than $4,000 every month. And if you do, have a credible justification for it. You know, emergency expense, had to replace a refrigerator, car repairs, et cetera, et cetera. But that's the best way to manage savings. It's not just how much you move from one account, because your counselor is going to look at all your accounts. It's hard. Some people end up with 5 accounts and you're moving money from one account to the next. You see one account growing, you only focus on that, but you didn't realize that the other account has been decreasing. So focus on net income minus payment shock savings, give yourself a monthly budget, and then live off of that. Yes. Yes. Oh, if it's your income, right? If it's income, then we'll count it. But let's just say if you had, I don't know, a friend, high school buddy who owed you some money, sent you $200, that won't count towards your payment shock savings. It'll count towards your minimum required funds, but not your payment shock savings. Yes.
If you have all your money saved, but it's in a checking account, you don't have a savings account, should you open up a checking account?
Nah, if you have one account, that's even better. It's easier to evaluate it. It's 1224. I'm not gonna make 1230. I'm telling you. Yes. It can start 3 months ago if you had already been saving, but if you're not, at least you know what you should be working towards. Yes. If you have stuff that you can sell, so it wouldn't count towards your payment shock savings. It'll count towards the total savings or money that you have to contribute towards the purchase. But, you know, we're looking at the income that we're going to use for qualifying you for the mortgage payment. We want to see that you're saving the money from that income. Where'd it come from?
I just saved it. I save every month, so.
So then you would have payment shock savings.
But I don't know that till today, but you're saying, so you're saying that I just continue doing what I'm doing and I'm.
Maybe.
Depends on how much the savings are, right?
It depends on where the money came from.
That was my paycheck.
Yeah, and you're saving from your paycheck. So then technically that would be payment shock savings, right? Yeah. But if somebody gave you $15,000 4 months ago, you want Laura to look at it and say, yeah, you saved $15,000, let me divide this by 3 months, you saved $5,000 a month, that's the wrong approach. She would be setting you up for failure. Yes. So there's no such thing as a co-signer when you're going through NACA. It's a co-borrower. That means that that person is going to go through the full counseling and qualification process. They're also signing a mortgage attesting that they're going to live in a home. That's the expectation.
As far as the payment shock, if you're, like, say if you were saving $1,000, right?
Yes.
Payment shock is $1,500, then I would still have to make up that $500, correct?
You just increase your savings.
Right, that's what I'm saying, but, like to piggyback off of her, what she was saying, like, she wouldn't have to do anything, but if my payment shock is more than I'm actually doing now, I
Then
still have to make it up.
when you say make it up, you just have to increase your savings.
Increase what I'm saving.
Yeah. Yep. Your council will take a look and they'll try and figure out how to get you qualified as soon as possible. So, yeah, if you've been saving 1,000 but your payment shock saving is 1,500, for me personally, then I would look at your 401k and say, okay, well, how much are you saving in your 401k? I'll give you credit for what you're saving in your 401k, but I would then require that going forward, you're saving 1,500 each month while you're shopping.
If it's reversed, like if I'm saving more than I actually have to make up, would my max?
You would just have more money in savings. Yes. Yep. We're going to get to that. Yeah. So you guys want to move forward? All right, cool. Talked about that. So we talked about this. Talked about that. We talked about that. Housing ratios. Yep, did that. All right, so there are some loan limits for NACA. We're in a high-cost market, so you only need to look at the second row. High-cost areas, single family, you can purchase up to $822,375, and just read across for 2, 3, and 4 family. That would be the purchase limits. Right? And actually, it's no longer just the purchase limits. That's actually the financing limits, which means, let's say if you found a home, a 4-family, and it was $1.6 million, and you had the $29,000 to add on top of the mortgage of $1.581750, then we would still do the loan.
Can you switch it back for a second?
Yes. For the most part, only when you get to the really like the 3 and 4 families do we hit the loan limit issues, right? Most households are not going to be in the affordability range for the $1.053 million for a 2-family. So I've never had an issue with a 2-family, but when you get to the 3-family and the 4-family, you might hit the loan limits. The difference is that we add the rental income for each additional unit, which increases your affordability. That's 12:30. All right, cool. Housing choice voucher. So our Section 8, he's not even paying attention now. I'm looking right at. So this is our Section 8 home ownership program, otherwise known as home ownership through public housing assistance. It's a program where you can use your Section 8 voucher to purchase a single-family home, whether that's a standalone, a condo, co-op, townhome, et cetera, et cetera. The way that NACA uses a Section 8 voucher, we take the payment standard. Whatever the payment standard is, based upon the number of bedrooms your voucher is approved for. So let's say, hypothetically, you have a 3-bedroom voucher and the standard payment is $3,100. That's going to be the mortgage payment that your council will work to qualify you for, even if your income is only $1,000 a month. They'll qualify you for the standard payment. You'll use that to shop for a home. There are some specific requirements. We do need to have a quasi-relationship with the housing authority or administrator for your Section 8 voucher. They need to confirm that they participate in the Section 8 home ownership program. And then in order to structure it where the mortgage payment would be equal to the payment standard, they would also have to provide in writing that they're willing to pay the lender directly for the HAT portion of the payment, which is the housing authority portion of the payment. So this program, the HOT PHA, is unique to NACA in terms of how we use the Section 8 voucher. The other thing is that we pair this with our 20-year mortgage. So after 20 years, you own your home free and clear. What about HUD? So if I don't know exactly what you mean by HUD. Are you talking about public housing? So public housing is when you live in a public housing facility or building that's owned and operated by the housing authority. That's separate from Section 8. So when you live in public housing, your eligibility is pretty much associated with that location. When you have a housing choice, rent anywhere in the country. Only difference is you just have to transfer your voucher from one location to the next. So we don't have a program for housing authority because there's no specific, there they give you reduced rent. There's not a subsidy that's making up the difference between market rent and what you can afford, like Section 8. Okay, in terms of membership and household, a NACA member is going to be anyone that's going to live in the NACA home after you purchase it who's age 21 or older, right? So, I typically encourage households to, if you don't know whether or not your adult children are going to live in your household after you purchase your home, it may not be in your best interest to add them as a household member. If you know for absolute certainty that they will, then fantastic. If not, then you should maybe hold off until you get closer to making the purchase decision on whether or not that's required. Once they're added as a household member, that limits their opportunity to purchase a home through NACA. All right, eligibility requirements is not open to investors. You cannot be an existing homeowner when you purchase a home through NACA, which means that you have to have your home listed and under contract before we'll close on your NACA home. You can talk to me if you have more questions about that specifically. You have to agree to occupy the home as long as you have the NACA mortgage. You have to satisfy the participation requirement. We require 5 acts of participation per year. Must be a registered voter, and you also have to adhere to the NACA membership agreement. We talked about priority and non-priority members. Remember, the priority members, they get the lower rate. Non-priority members get NACA's market rate, which is still lower than the market rate for most other lenders. The distinguishing factor is your qualifying income. Priority members' qualifying income is at or below median income for this area, estimated to be about $125,000. Non-priority members, you're above $125,000. And it's based upon where you intend to purchase. So let's say if you make $100,000 now and you work remotely and you don't want to purchase in New York, you want to purchase in, let's say, Georgia. The median income in an area that you're going to purchase is likely going to be less than $100,000. So you would be a priority member if you decide to purchase in New York. If you decide to purchase in Georgia, you would be a non-priority member. Same thing with Newark versus the 5 boroughs. In Newark, our median income is $126,000. 5 boroughs is, you see who the real boss is, $99,000 for the 5 boroughs. All right, we talked about character-based lending, right? From the moment that you interact with our organization, your character is under evaluation. From the moment you come to the workshop, your follow-ups, your interactions with the NACA staff as you go through your qualification process. We're also going to look at your capacity. Capacity has to do with your ability to pay a mortgage, right? Typically, it's going to be your income, whether that's earned income, self-employment income, or other income such as retirement income, Social Security, alimony, child support. And then we look at the funds. You will need to have some funds in order to move forward with the purchase. The baseline of what you can qualify for is always going to be equal to what you pay in rent. If you have a history of paying your rent on time for 12 months, you've already demonstrated at the very least, as long as your income supports that through the ratios, that you can afford a monthly mortgage payment that's equal to your rent. Rent is a hard requirement. If you have one late payment, you have to have a very strong justifiable reason in order to move forward. Otherwise, you have to reestablish 12 months of on-time rent payments. So we don't use credit scores. Rent is really that determining factor, outside. Income, eligible income, W2 income, that's your employment income. Other income is income such as, so for W2 income, you have to have at least 2 years of employment without a gap greater than 30 days. Other income, we want to see that you've been receiving it consistently. It's going to continue for at least 5 years going forward. Other income includes income such as Social Security, retirement, pension, alimony, child support, and then you have self-employed income. We're going to look at 2 years of tax returns. We want to see your tax returns, your tax return transcripts. We want to see that you have 2 years of profitability. For your pay stubs, you're going to need 30 days of pay stubs. For your W-2s, 2 years of W-2s, 2 years of tax returns and tax return transcripts. If you have other income, we're going to look at your award letter. If it's some sort of child support or alimony, we want to see either the divorce decree or the court documentation, specifying the child support. And then for self-employed, we're going to look at 12 months of bank statements, 2 years of 1099s, and we're going to look at the tax returns and the transcripts. Debts. Your debts will be evaluated by way of your credit report. We're going to look at all active debts. These are debts that are current. We're going to also look at all the debts that report on your credit report. This is important. So when it comes to charge-off accounts don't have to be addressed in order to move forward. So if you have a charge-off account, it shows charged off on your credit report and you were thinking about reaching out to the lender or the creditor to try and repair your credit and prepare for NACA, I suggest you wait until you meet with a counselor like Laura, have her review your credit report, and she'll tell you which accounts may require some sort of financial commitment, because otherwise you may start making a payment on an old charged off account where you could have used that money towards your payment shock savings or towards the money you're going to need to purchase your home. And then also, once you commit to a payment plan for a charged off account, you resurrect that account. And then now it's going to be a requirement in terms of how your debts are evaluated. Liens and judgments have to be addressed immediately. They have to be either satisfied, paid in full, or in an approved repayment plan. And student loans. Student loans are the only charged off account types that never go away. So if you have a charged off or defaulted student loan, contact the servicer, enroll in a rehabilitation plan immediately, and work towards rehabilitating those loans. All right. This was the question. How much money do I need to have? Minimum required funds. So the minimum required funds includes the earnest money deposit. Anybody know what earnest money deposit is? Yeah, something to show that you're serious. It's a good faith deposit. So for most other transactions or other lenders, typically what you offer as your deposit is known as a down payment and is credited on your closing, towards your down payment on closing. For NACA, we simply refer to it as the earnest money deposit. It's a deposit that you give to the seller that shows that you're serious, shows that you have some skin in the game. So, for our New Yorkers, they're likely offering earnest money deposit, $10,000, $20,000, to show the seller that they're serious, right? Instead of competing on price and offering a higher purchase price, they compete on terms. Because whatever money you offer as your earnest money deposit is what you have at stake according to the contractual terms. If you don't fulfill your contractual agreements, then the seller has the right to, sue you for your earnest money deposit or have the settlement agent retain it. Inspection fee. Customarily, earnest money deposit historically in New Jersey was about $1,000. It's rare I see $1,000, maybe $2,500 on the low end. More often than not, it's $5,000 or more. I've done a transaction, I've closed a loan in New York for $1 million+ deal, and there was no earnest money deposit. I don't know who that realtor was and how they negotiated it, but I was shocked and baffled. So it's not an absolute requirement, but more often than not, you work with a realtor. A seller's not going to accept the offer unless you show some skin in the game. Inspection fee, customarily somewhere between $450 for a single family, upwards to maybe $600 or $700 for a 4-family. And then you need to have the escrows. So these are your prepaid property taxes, homeowners insurance, prepaid interest, and the reserves. The prepaid interest, when you close on your home, your first mortgage payment will not be due for at least 30 days. It's going to be, the only way it's going to be due Within 30 days is if you close on the last day of the month. Most people that are wise will not close on the last day of the month. Best to close on the first day of the month because your first mortgage payment won't be due for 60 days. So the lender is going to collect somewhere between 15 to 30 days of prepaid mortgage interest, right? For the time that the money's lent before your first mortgage payment is due, you're going to have to make sure you have that as part of your escrow funds. And then you also have a reserve. So for NACA, we want to make sure you have a strong financial foundation before becoming a homeowner. That means that if you're buying a single family home and you have payment shock savings greater than $300, you're going to have at least 2 months of mortgage payments for reserves. If you're buying a 2-family, you have to have 4 months, 3-family, 5 months, and a 4-family, 6 months of reserves. It's a savings requirement. When you close, the money stays in your bank account. Once you close, you can furnish your home. But I suggest that you keep the money in reserves if you're buying a multi-family home. All right, so this is what we would consider to be qualified now. You meet the eligibility criteria. We'll get you set up with your participation. You have stable income for the last 24 months, on-time payments for the last 12 to 24 months, on-time rental payments. You've documented payment shock savings, no unpaid liens or judgments, and documented minimum required funds. Anyone meet that criteria? Okay, congratulations. You're considered ready now. There's a website that you can go to. It's called NORC Ready Now. You fill out that form once you get your NACA ID. Once you fill out that form, a counselor will contact you once your file is complete, and they'll try to schedule you a priority appointment. So it's norcreadynow.com. All right. Newark, like the city Newark, Newark. Mm-hmm. All right. So now we're going to say the participation pledge, and then we will welcome you to the NACA family, and Laura will walk you guys through obtaining your NACA ID. So do we have one last volunteer to lead us through the participation pledge? Huh? Please join us. All right, your name? Carol. Carol's going to lead us through the participation pledge. If you can't see the pledge on the screen, it's actually located in the book. And you know what page it's on, Laura? Look at the table of contents. You can find it. It should be listed in the table of contents. Page 47. You ready, Carol?
I'm ready.
All right. Everybody ready?
Okay.
On the count of 3. 1, 2, 3.
I pledge to participate with NACA in future community outreach and advocacy campaigns. I understand that community advocacy is the major reason that NACA can provide America's best homeownership program, including free, individualized, comprehensive housing services. I embrace NACA's mission to revitalize communities, advocate against financial exploitation, promote economic justice, and eliminate predatory and discriminatory lending practices. I therefore pledge, I will participate in at least 5 actions and activities a year, such as neighborhood outreach, distributing information about NACA, informing people about NACA's purchase and home safe programs, participate in rallies, demonstrations, and provide public education, or in whatever way I feel comfortable in support of NACA's mission.
Woo! Congratulations! Welcome to the NACA family. It has been an absolute pleasure. I'm now going to turn it over to Laura Spiesman. She's going to walk you guys through obtaining your NACA ID. We'll hang around for about 5 or 10 minutes afterwards to answer any questions.
Okay, good morning, folks. So the next step will be to get your NACA ID. So the first thing you want to do is, with your phone,
you're going to go to the NACA website, which is naca.com. And when you go to naca.com, you'll see a nice, picture of a nice family with their little daughter, and you'll see the sign in, the little picture. You're going to click on that, and then the next thing you'll see is a screen that says Member Portal on the top. Okay, you're going to click on Member Portal, and then you'll see a NACA Member Portal login. But you're going to scroll down on that page, and if you have completed a NACA workshop, register your account. So you're going to click on Register. Then you'll see the next screen, which will be Register for the NACA Purchase Program. And the first thing that you will see is something that asks for your attendance code. Okay, so I'm going to give you that code. Hold on, wait a minute. I have it in my phone. So hold on. Hold on. So, yes. Yeah. Sorry. I'll go through it again. Okay. So when you're in that screen, that registration screen, the first thing the attendance code that you're going to need is 34503. That's 34503. Okay, so in that screen, on that first tab, you'll put in that attendance code, and then after that, it's going to ask for your information. So we're going to need, in order to set up an ID for you, you will need to put in your name, your address, your social security number, your phone number, your email, and you are going to create your own password. Okay? Yes, ma'am. Yeah. It would be, you would be creating one ID for the entire household. Yes. So yeah, you don't need to create separate IDs. Yes. Okay. So all right. So but I can I can go through this again. Naca.com. All right. Let me go. Hold on. Yes. You'll see the family. You'll see the little sign in all the way on the top right. You'll see Member Portal. It will expire in about an hour. So you need to do that now because it will not work after that. If you go to Member Portal, we'll say NACA Member Portal Login. You're going to scroll down. If you have completed a NACA workshop, register your account. It's that second green little tab. And register for the NACA Purchase Program. Then you're going to put in that attendance code 34503, and then you're going to put in your information, your name, your first name, your last name, your social security, your full social security number, not just your last four, your phone number, your mobile carrier. Complete all of the fields. If you do not complete all of the fields, it will not work. So put in your address, your street number, your street name, the city, state, zip, and you are going to create a password. The password is going to include an uppercase letter, obviously lowercase letters. It has to be 8 characters long, numbers, and a special character. So if you do that, and Graduation code. Huh? Oh, NAC ID. Yeah, I was going to say that sounds like you got a sounds like you got your NAC ID. If you got your NAC ID, you're good to go. And unless you have any other questions for either of us after, but if you got your NAC ID, you are good to go. Okay. Yes.
We had an account